Hello everyone, welcome to EduTap and welcome to today's Mahamarathon session. So I hope you all are very excited for today's Mahamarathon session where we are going to discuss 100 plus MCQs from your RBI notifications, RBI press releases and finance current affair from the recent 3 months, from the recent months, and these questions are going to be very important for your RBI Grade B 2025 examination. Okay, so first of all, give me a thumbs up if I'm clearly audible and visible. And today we are going to discuss 100 plus MCQs. I have brought some extra MCQs for you so that you have the good coverage before the examination. Okay, so this is your Maha Marathon for your RBI notifications, RBI press releases, and for the finance current affair. And here we are going to do the final revision. Here we are going to discuss the questions so that you have good coverage before the examination. All good? Okay, and I hope there is no problem in the voice. There is no audio problem that is coming. I hope everything is good. All okay? Okay, so let's get started. And before starting, you will get the PDF. Do not worry about the PDF. You will get the PDF of the session. You will get the PDF of the session in the Telegram channel of EduTap, and the link for the Telegram channel is provided in the description box below. So do not worry about the PDF. You will get the PDF in the Telegram channel, and the link for the Telegram channel is given in the description box below. Let's start with the questions. Give me a fire sign. Give me a thumbs up if everyone is ready for the questions. So bringing the first question in front of you, that is from the Supervisory Data Quality Index that is recently released in September 2025. Okay, so the Supervisory Data Quality Index has been released for June 2025, and you have to tell me that which of the following statements is or are correct in regards to the Supervisory Data Quality Index. Okay, so this is the first question in front of you. Good evening everyone, good evening. So this is in front of you. This is the first question. Try to answer this question. Okay, so here it measures the Supervisory Data Quality Index. It measures the data quality in terms of accuracy, timeliness, completeness, and consistency in the submission of returns. Okay, the Supervisory Data Quality Index score of Scheduled Commercial Bank has improved in June 2025 to 89.9 as compared to 89.3 in March 2025. So this is correct. In June 2025, no entity scored below 80. So this is also correct. So second and third statements are correct. Only the first statement was wrong, and that's why the answer here is B. That's why the answer here is B. The first one is incorrect. Remember the parameters for the Supervisory Data Quality Index. It is accuracy, timeliness, completeness, and consistency. Transparency is not there. Okay, transparency is not there. So accuracy, timeliness, completeness, consistency. Timeliness, completeness, accuracy, consistency. These are the four parameters of Supervisory Data Quality Index, and its value has improved from 89.3 to 89.9. Okay, and there was no entity, there was zero entity that has scored below 80. That has scored below 80. There are entities that have scored in above 80. Okay, so you can see that most of the entities have scored between 80 and 90 or more than 90, and there is no entity, there is zero entity that has scored below 80. So that is the idea. Now moving to the next question. What is the duration of the scheme for facilitating accelerated payout for inoperative accounts and unclaimed deposit? What is the duration of this scheme? So this scheme is newly launched by the Reserve Bank of India for a very limited time period, for only 1 year time period. Now you must remember that when this scheme is starting and when this scheme is going to finish. So this scheme is starting from October 1st, 2025, and this will finish September 30, 2026. So this scheme is for 1 year. So, and here the benefit or the incentive is being provided to the bank so that they can reopen the inoperative accounts, or they can help the customers to reopen their inoperative accounts, as well as the customers to get back their unclaimed deposits. Okay, so the bank will get the incentive so that they open the inoperative accounts, or they go after the customers so that the customers get back their unclaimed deposits. So here the answer is C. Very good. So now try to answer this question. This is also the question from the scheme, as the scheme is important. As I have told you that the incentive will be provided to the banks so that the banks go after the customers so that the inoperative accounts can be reopened, as well as unclaimed deposits can be returned to the claimants and the customers. Okay, so unclaimed deposits, that are the deposits that are not claimed for 10 years or more, that has been transferred to the Depositor Education and Awareness Fund. So these unclaimed deposits have to be reduced with the banks. Okay, so these unclaimed deposits have to be reduced, and the banks will get the incentive of 7.5% of the amount or 25,000, whichever is less for such kind of activity. Okay, so banks will get the incentive or banks will get the payout of 7.5% of the amount or 25,000, whichever is less, for unclaimed deposits that are unclaimed for 10 years or more that has been transferred to the depositor education and awareness fund. So you have to remember the payouts for inoperative accounts. For inoperative accounts that are inoperative up to 4 years, the incentive or the payout is 5% of the amount or 5,000 rupees, whichever is less. And so for inoperative accounts, there are the different percentages as per the timeline. For unclaimed deposits that are unclaimed for 10 years or above, the banks will get the incentive of or payout of 7.5% of the amount or 25,000, whichever is less, to return the money to the customers, to the rightful owners. Okay, now coming to the next question. This question is from foreign exchange retail platform. We have recently discussed it in the Finance 360-degree session, where we discussed that the foreign exchange retail platform has been linked with the Bharat bill payment system, that is Bharat Connect. Now there are certain important things that you have to remember from this RBI notification, from this RBI press release. So try to answer this question. Okay, and this has been recently, the linkage has been recently established and it has been announced in the Global FinTech Fest that is going on currently. Okay, so try to answer this. Here you have to tell that which of the following statement is or are incorrect in regards to the foreign exchange retail platform that has been connected with the Bharat bill payment system or Bharat Connect. So pilot is being made available to the customers of Axis Bank, Federal Bank. Instead of Punjab National Bank, there should be some other bank that you have to tell me. State Bank of India and Yes Bank. So other banks are correct, but instead of Punjab National Bank, there should be some other bank. Tell me that. The customers of these banks can access foreign exchange retail through Cred and MobiKwik applications. Correct. The customers of Federal Bank and State Bank of India can also access the foreign exchange retail through the internet banking applications of these banks. So this is wrong because it should not be Axis Bank, it should be Federal Bank. Okay, so here the answer is that which of the following statements are incorrect. The first statement is incorrect. Instead of Punjab National Bank, it should be ICICI Bank. Okay, and instead of Axis Bank, here it should be Federal Bank. So first and third statements are incorrect, and that's why the right answer here is C. The right answer here is C. Very good. Very good. Everyone is giving the right answer. You remember, that is good. So 5 banks are the participating banks for this linkage. That is Axis Bank, Federal Bank, ICICI Bank, State Bank of India and your Yes Bank. Okay. Out of these 5 banks, State Bank of India and Federal Bank are providing the facility through their own retail, through their own internet banking application also. Okay, so this is the idea. Now this we have discussed access to foreign exchange retail platform. Now you can get the access of foreign exchange retail platform through the Bharat Connect, and this was launched in the Global FinTech Fest 2025 by Shri T. Ravi Shankar, Deputy Governor of the Reserve Bank of India, and these are the details that you have to remember. Foreign exchange retail platform is being operated by Clear Corp. This also you have to remember, and it was launched in 2019. Okay, now coming to the next question, that is regarding your integrated ombudsman scheme, whose applicability has been expanded. Now the integrated ombudsman scheme will also be followed by the state cooperative banks and the central cooperative banks. So state cooperative banks and the central cooperative banks are also under the purview of the integrated ombudsman scheme. So you have to tell me that which of these entities is not under the scheme, or which of these entities is not the correct statement, okay, for the scheme or for the applicability of the scheme. So I'll try to answer this. So all commercial bank, regional rural bank, state cooperative banks, central cooperative banks, scheduled primary urban cooperative banks, they are under the purview of the scheme. Non-scheduled primary urban cooperative bank with deposit size of 50 crore and above, they are also under the purview of the scheme. All system participants, they are also under the purview of the scheme. All non-banking financial companies, including housing finance companies, no, excluding housing finance companies, first of all, which are authorized to accept deposits or they have the customer interface with an asset size of 100 crores or above. Okay, so it should not be 50 crores, it should be 100 crores. It should not be including, it should be excluding housing finance companies. So D statement is wrong, as the scheme does not include the housing finance companies. Okay, credit information companies are under the purview of the scheme. So only the D statement is incorrect. Only here the D statement is incorrect, and that's why the answer is D. Very good. So remember that applicability is always very important. Last year there was direct questions from the applicability. So the scheme this is the applicability of the scheme. The scheme is applicable on all the commercial banks, regional rural banks, state cooperative banks, central cooperative banks, primary urban cooperative banks, non-scheduled primary urban cooperative banks with deposit size of 50 crore and above, all the non-banking financial companies excluding the housing finance companies that are taking the deposits or they have the customer interface with an asset size of 100 crores or above. Okay, so this is the idea about the scheme. Now coming to the next question, that is Reserve Bank of India has signed its renewed statement of commitment to the foreign exchange global code. It was developed by a partnership between central banks and market participants from around the globe and was first published in dash. So basically RBI has signed its renewed statement of commitment to the foreign exchange global code, which was recently reviewed and updated in December 2024. Okay, but the foreign exchange global code, it was first published in 2017. It was first published in 2017. Very good, everyone. Very good. So do mark the right answers that you are giving a tick. So first published in 2017 and it was recently updated. It was recently updated in December 2024 and that's why the RBI has signed the statement of commitment to the foreign exchange global code. So this is the renewed commitment. This is the renewed commitment that RBI has given to the updated foreign exchange global code. Coming to the next question, that is regarding your payment regulatory board. This was recently in news, or this was recently in the RBI press release section in September 2025. So try to answer this question from the payment regulatory board that was quite in news recently. So first of all, Governor of RBI is the chairperson of the Payment Regulatory Board and has a casting or second vote in case of equality of votes. So first of all, there are 6 members in the Payment Regulatory Board, right? 3 members are from the Reserve Bank of India and 3 members are nominated by the Government of India. The chairperson of the PRB is the Governor of RBI, which also has the second vote or casting vote. Secretary of the Department of Financial Services, Secretary of METI, that is Ministry of Electronics and Information Technology, and Srimati Aruna Sundararajan, they have been the members that are nominated by the central government. So they are the 3 members nominated by the central government. Correct. Very good. The board shall ordinarily meet at least how many times? At least 2 times in a year. Okay, not 4. As well as the quorum for holding the meeting, 3 members should be present and it shall include, the 3 members should include the chairperson. Members nominated by the central government cannot be above the age of 70 years when they are being hired or when they are being nominated. Okay, so all the other statements are correct, only the C statement is incorrect and that's why the answer here is C. It should not be 4 times, they shall meet at least 2 times. They shall meet at least 2 times. Okay, so these are the nitty-gritties about the Payment Regulatory Board. The members of Payment Regulatory Board, you have to keep in mind, it was recently released, as well as the idea and the data points from the Payment Regulatory Board. Okay, so that you have to remember. So the members that are nominated by the central government, they are hired or they are nominated or they become the member of the Payment Regulatory Board for a period of how many years? For a period of how many years? For a period of 4 years, and they are ineligible for reappointment. That means they cannot be reappointed. Okay, so the members are nominated by the central government in the Payment Regulatory Board become the member for a period of 4 years and they are ineligible for reappointment, okay, or renomination. No person shall be nominated as a member if they have completed the age of 70 years, as well as if a member nominated by central government is absent for 3 consecutive meetings without the permission from the chairperson, then the member will have to leave the position. Okay, so this is the idea. Now coming to the next question, following the launch of the next generation data warehouse of the Reserve Bank of India centralized information management system. So centralized information management system has been launched. As per the existing practices, the returns for every month should be submitted by dash of the succeeding month. Okay, so returns, that means the data has to be submitted for every month by the 7th of the succeeding month, and the data, the internet banking data as well as mobile banking data has to be submitted through the CIMS now. Okay, so this is the idea. Okay, so the answer here is 7th. So basically CIMS, now it has been said that the internet banking return and mobile banking return has to be submitted through the CIMS, as well as the data has to be submitted by the 7th of the succeeding month. Coming to the next question, that is by how much did India's foreign exchange reserves increase on a balance of payment basis in April to June 2025? So this is the recent data that has been released, and that's why just the most important point you have to keep in mind. So try to answer this question. Yes. So here the answer is $4.5 billion. Okay, $4.5 billion. So this is the answer. So foreign exchange reserves, by how much did India's foreign exchange reserves increased on the balance of payment basis? So on the balance of payment basis, the foreign exchange reserves have increased by $4.5 billion. Okay, so this is the increase because of the balance of payment. So the foreign exchange reserves have increased because of balance of payment by $4.5 billion, and because of valuation, because of increase in gold value. Because of increase in gold value, the foreign exchange reserves have increased by $25.3 billion, and that's why total increase in foreign exchange reserves was $29.8 billion. That is the idea. Now, what was India's current account deficit as a percentage of GDP in the Q1 of the new financial year or the new year? So what was India's current account deficit as a percentage of GDP? It was 0. How much percent? 2%. 0.2% of the GDP. Okay, so India's current account deficit was 0.2% of the GDP for Q1. For Q1. So here, see, just try to remember the most important data. The India's current account balance recorded a deficit. So in the current account, in the balance of payment, there is current account, there is capital account. So current account was in deficit of 0.2% of the GDP. Okay, in comparison to the 0.9% of the GDP in the previous year Q1. So just remember the 0.2% of the GDP. Okay, and why the current account was in deficit of 0.2% of the GDP? Because of the trade in goods. The trade in goods was in deficit, while the trade in services was in surplus, and transfer payment were also in surplus. Okay, so this is the idea. Now coming to the next question, the 35th conference of the state finance secretaries was held in Mumbai. What was the theme of the conference? Okay, so state finance secretaries conference was conducted by RBI and it was held in Mumbai. The theme of the 35th conference was the theme of the 35th conference was Journey Towards Economic Prosperity Through the Path of Fiscal Consolidation. Fiscal consolidation basically means decreasing the fiscal deficit of the government, decreasing the extra expenditure of the government, decreasing the borrowing requirement of the government. Okay, so E is the right answer here directly. Basically, there is the 35th conference of state of finance secretaries happened, and the theme of the conference was Journey Towards Economic Prosperity Through the Path of Fiscal Consolidation. So this is the correct answer. Okay, now there is a microsite that has been launched for public awareness on the banknotes, and the new website is the indiancurrency.rbi.org that has replaced the older website of Paisa Bolta Hai. Okay, coming to the next question, that is regulatory review cell. Now the question is about the regulatory review cell that has been recently constituted and announced by the Reserve Bank of India. So which of the following statements is or are incorrect in regards to the regulatory review cell? That you have to tell me. So RRC shall be set up in the Department of Regulation, effective from October 1, 2025, and would undertake the review of regulations in a phased manner. The tenure of the advisory group on regulation that will help the regulatory review cell, or that will provide the external feedback to the regulatory review cell constituted by RBI in 2025 is for 3 years, while it is renewable or extendable by 2 further years. The chairman of AGR, is it Shri Gautam Thakur? So actually first statement is correct, second statement is correct, but the third statement is incorrect. Why? The chairman of the advisory group on regulation is Rana Ashutosh, Shri Rana Ashutosh. Okay, so remember this. First and second statements are correct. The third statement is incorrect, and that's why the answer here is C. The answer here is C. Always read the question very, very carefully because you will be reading 80 questions. So do not get confused between incorrect and correct. Okay, do not get confused in between incorrect and correct. Here the incorrect statement was asked, so only the third statement is incorrect. That's why the right answer here is C. Got it? Chalo. Moving forward, so regulatory review cell, the chairperson. So chairperson of AGR is the advisory group on regulation. The chairperson is Rana Ashutosh Kumar. The AGR has been established for an initial tenure of 3 years, which is extendable by a further period of 2 years. Regulatory review cell is under the Department of Regulation. Now coming to the next article or the next question. Reserve Bank of India had earlier said that the entire merchanting trade transaction must be completed within an overall period of 9 months. Upon review, the RBI has extended the permissible period for outlay of foreign exchange under the merchanting trade transaction from the earlier limit of dash months to now dash months. So merchanting trade transaction basically means that buying the commodity from one country and selling the commodity to another country without letting the product come to India. So let's say buying the product from China or Vietnam at cheaper rate and selling the product to Germany directly without letting the product come into India. So Indian exporters and the Indian merchants can buy the product from Vietnam, do not let it enter India, directly sell it to Germany. So this whole process of merchanting trade transaction, buying the product from Vietnam and selling it to Germany, let's say, so this whole process takes the time period of 9 months, or it has been given the time period of 9 months. So for import payments plus the export receipts, okay, for the import payment, because for the import the payment has to be given, and for the export the receipts has to be taken. So import payment and export receipts, this has to be taken within 9 months. But the outlay, that is the expenditure or the import payments, before it was said that at least the import payment should be given within 4 months. Now it has been said that the extended time has been provided, and now it has been said that the import payments has to be given within 6 months. Okay, so this is the idea, that the right answer here is D. So merchanting trade transaction, where the Indian merchant is buying the product from one country and selling the product to another country. So in this, the import payment and the export receipt, this whole process should finish within 9 months. For the import payments, before 4 months were given within this 9-month time period, and now 6 months have been given for the import payments, for the outlay of the foreign exchange, for the expenditure of the foreign exchange, for the import payments. From the 4 month, the time period has been increased to 6 months. Very good. So the 9 month is for the overall merchanting trade transaction, for the import as well as for the export payments and the export receipts. The 4 month is for the outlay, is for the import payments, while it has been extended to 6 months now. It has been extended from 4 months to 6 months now. Okay. Now coming to the next question regarding the regulation of payment aggregators. So RBI has released the master direction on the payment aggregators, and this master direction is important. So try to answer this question. So here the question is asking that which of the following statement is or are incorrect in regards to the directions. Okay. So the question is regarding that which of the, so RBI has released the Reserve Bank of India Regulation on Payment Aggregators Direction 2025. Which of the following statement is or are incorrect in regards to the payment aggregator direction, master direction. Okay. So the non-bank entity shall seek authorization for operating as a payment aggregator. The non-bank entity has to take the authorization for operating as a payment aggregator, but first it has to take the no objection certificate from its own regulator. Let's say XYZ company under the regulation of SEBI wants to function as a payment aggregator. Okay, so first it has to take the no objection certificate from SEBI, and within 45 days of receiving the no objection certificate, it has to send the application for payment aggregator. So this is the idea. So non-bank entity shall seek the authorization for operating as a payment aggregator, but first it has to take the no objection certificate from its own regulator, and within 45 days of getting the no objection certificate, it has to apply for the payment aggregator. An entity seeking authorization to start the payment aggregator business must have a minimum net worth of 15 crores in the start only, and shall attain a minimum net worth of 25 crores by the end of the third financial year. So this is correct. The third one is net worth for the payment aggregator shall also include compulsorily convertible preference shares. Additionally, if deferred tax assets have been already included, they have to be deducted. So this is correct. Second and third statements are correct. That's why the right answer here is 1 only. That is incorrect. Incorrect was asked. Okay, so here the right answer is A. So all of you have given the right answer, that is A. All these data points are very, very important, so keep them in mind. Okay, so master action has been released on the master action has been released on regulation of payment aggregator. So now the net worth requirement is important. The net worth definition was expanded to include the compulsorily convertible preference shares and delete the deferred tax assets. Okay, so now it was also said that for inward and outward transactions, the maximum value has also been given. Okay, for inward transaction and outward transaction, through the payment aggregator cross-border, there is the maximum value limit that has been given, so that you keep in mind. So which of the following statements is or are incorrect in regards to the direction? Try to answer this question. Try to answer this question from the Master Direction on Regulation of Payment Aggregator. So all these statements, which of the following is or are incorrect, that you have to tell me. So payment to any other third party through the payment aggregator or through the escrow account is allowed. Okay, payment to any other party or third party on specific direction of a merchant is allowed by the payment aggregator from the escrow account having, if the merchant has the physical or online presence with annual turnover of 40 lakh and annual annual export turnover of more than 5 lakh. Okay, it is not 10 lakh, it is 5 lakh. The core portion facility shall be permissible to entities that have been functioning for 26 fortnights, correct. A payment aggregator cross-border shall not purchase foreign currency from or sell it to any other entity other than authorized dealer in respect of inward transactions or outward transaction. The maximum value per transaction shall be 25 lakh. It is not 20 lakh, it is 25 lakh. So first statement is incorrect because the third party transaction is allowed if the direction is given by the merchant from the escrow account of the payment aggregator, but they should have the physical or online presence of 40 lakh of annual turnover or annual export turnover of 5 lakh. Okay, 5 lakh, and here it should be 25 lakh of inward transaction or outward transaction. That is the maximum value. So first statement is incorrect, third statement is incorrect, and that's why the right answer is E here. That's why the right answer is E here. Okay, second statement was correct. Core portion facility shall be permissible to entities that have been in business for 26 fortnights, that is around 1 year. Okay, so all of this we have already discussed in the detailed session that I have taken. I have provided you all the explanations so that if you want to revise, you can revise through this one PPT in a detailed manner. Okay, now here you can see if the merchant's annual turnover does not exceed 40 lakh or its annual export turnover does not exceed 5 lakh, then this is the process of due diligence that can be followed. Okay, while if the payment to any third party has to happen on the request of the merchant from the escrow account, then the annual turnover should be more than 40 lakh or the annual export turnover should be more than 5 lakh. That is the idea. Okay, chalo, coming to the next question, try to answer this question. This is from the authentication mechanism for digital payment transaction directions 2025. So read the question very carefully and try to answer this question. So under the Reserve Bank of India authentication mechanism for digital payment transaction directions 2025, which of the following statements is correct? That you have to tell me. So all digital payment transactions in India must be authenticated using exactly 3-factor authentication? No, there is only 2-factor authentication that is required, right? Issuers are prohibited from using SMS-based OTP. No, issuers are not prohibited from using the SMS-based OTP. Based on the perceived risk associated with the transaction, no additional checks can be taken. No. This is wrong. Additional checks can be taken if there is higher perceived riskiness. At least 2-factor authentication should be dynamically created. No, at least 1 factor of authentication should be dynamically created. The other one can be static. Card issuers shall by October 1, 2026 put in place a mechanism to validate non-recurring cross-border card not present transaction for overseas merchant or overseas acquirer. This is correct. This is correct. Okay. By October 1, 2026, the mechanism has to be put in place for validating the non-recurring cross-border card not present transactions for the overseas merchant or overseas acquirer. So here the E statement is correct. All of this we have already discussed in a detailed session where we discussed that it has been said that there is the 2-factor authentication for the digital transaction. At least 1-factor authentication should be dynamically created. Okay, should be dynamically created. Okay, and it should be robust, as well as these directions are applicable on all the payment system participants, bank, non-banks, payment system participants, as well as these directions shall be applicable from April 1, 2026. So it was also said that there can be additional checks that can be taken other than the 2-factor authentication if there is perceived riskiness. Okay, responsibility of the issuer: if the issuer that is issuing the 2-factor authentication, if they are not complying with the directions, then they are responsible for covering the losses that happen to the customer. Okay, cross-border transactions, for that it was said that card issuers shall by October 1, 2026 put in place the mechanism to validate non-recurring card not present transaction for the overseas merchant or overseas acquirer. Now coming to the next question, following recent amendment by the RBI, which of the following entities have been newly permitted to participate in non-deliverable rupee derivative contracts similar to authorized dealer category 1 banks operating as the IFSC banking unit? So authorized dealer category 1 banks that are operating as the IFSC banking unit in the IFSC, they are allowed to undertake the non-deliverable rupee derivative contract. Now it has been said that these same non-deliverable rupee derivative contract can also be undertaken by the standalone primary dealers registered as authorized dealer category 3. Okay, so this is the crux of the news article basically. So authorized dealer category 1 banks in India operating an IFSC banking unit have been permitted to transact in non-deliverable derivative contracts involving the rupee with users. Other authorized dealer category 1 banks operating an IFSC banking unit and bank overseas. On a review, it has been decided that the standalone primary dealers that are the authorized dealer category 3, they shall also be able to transact non-deliverable derivative contract involving the rupee. Such transactions can also be offered to residents and non-residents by standalone primary dealers authorized as category 3 authorized dealer. Okay, so this is the explanation that you can read. Now, as well as it has been said that voluntary surrender. See, if the voluntary surrender has to happen, if the NBFC want to do the voluntary surrender of certificate of registration before they were sending the physical documents as well as they were sending the physical application. Now this application for voluntary surrender of certificate of registration can be sent through which portal of RBI? Through Saksham portal, through Sarthi portal, through Pravah portal, through Mitra portal, or through any other portal. So which is the portal that is provided by the, or which is the platform that has been provided by the Reserve Bank of India for taking the applications from the entities and individuals? So it is Pravah portal. Very good. What is the full form of Pravah? That also you have to keep in mind. So basically RBI has said that if the NBFC want to voluntarily surrender the certificate of registration, it can, previously it was sending the application, NBFC was sending the application with the indicative checklist documents. Now, as the Pravah portal has been launched, that's why the application and the documents can be given through the Pravah portal until the RBI notifies that the NBFC can close its business. Till then, it has to follow, the NBFC has to follow all the guidelines and instructions and shall submit all the requisite forms and returns. Okay, till the RBI allows the cancellation of certificate of registration. Now coming to the next question. Yes, Pravah portal is important. Remember the full form of the Pravah portal. Okay, so now coming to the next question. What is the maximum percentage of owned funds that the state cooperative banks and the central cooperative banks can invest in the SSC set by the NABARD with the permission of the Reserve Bank of India? Okay, so try to answer this question. Yes, I'm getting the answer B, and that is absolutely correct. So basically here 5%, this is the maximum percentage of the owned funds that can be used by state cooperative banks and the central cooperative banks that can be invested in the SSC set up by the NABARD. So RBI, so basically in September 2025, it was notified that RBI has provided the approval in April 2025 to NABARD to set up the shared service entity, that is the SSC, for the state cooperative bank and central cooperative bank, wherein the state cooperative bank and central cooperative bank can buy or invest the shares of the SSC, can buy the shares of the SSC, that is the shared service entity. Now how much shares can the state cooperative bank or the central cooperative bank can buy in the SSC? So that is up to the 5% of owned funds. Okay, so this is the idea. And these shares of the SSC, they are the non-SLR instrument. That means statutory liquidity ratio. This is the reserves that the banks maintain with themselves. Okay, in the statutory liquidity ratio, the reserves are maintained in the form of gold, government securities, or cash. Now if the state cooperative bank or central cooperative bank are buying the shares of the shared service entity under the NABARD, so this basically is a non-SLR investment, because this kind of investment does not come under the SLR. Okay, so this is the idea. So first of all, remember that the investment by the state cooperative bank, central cooperative bank in the share capital of SSC shall be restricted to 5% of owned funds. This limit is separate from the total limit of 10% on the non-SLR investment. So for the state cooperative banks and central cooperative banks, total non-SLR investment shall not exceed 10% of the total deposits, as well as in the unlisted securities, the investment in unlisted securities by these entities shall not exceed 10% of the total non-SLR investment. So total non-SLR investment, from that the investment in unlisted security should not exceed 10%. So this is the idea. So these are the percentages that are important. The 3 percentages are important. 5%, this 10% of the total deposits, this 10% of the total non-SLR investment. Okay. Now coming to the next question, try to answer this question. So consider the following statement regarding ways and means advances for the Government of India for October 2025 to March 2026. So basically, the Government of India can take short-term loan or short-term advances from the Reserve Bank of India to meet the temporary mismatches in the receipts and expenditure. Okay. Now the Government of India can take these short-term loans for 90 days time period, and within the 90-day time period the money has to be returned to the Reserve Bank of India. So WMA limit has been set for the second half of the current financial year, that is 50,000 crore. Absolutely correct. The interest rate on the ways and means advances on this short term loan that has to be returned within 90 days. So the ways and means advances for this kind of loan, the interest rate is repo rate. Interest rate is repo rate. It is not 2% above the repo rate. For overdraft, if overdraft facility is taken, then the interest rate on the overdraft is repo rate plus 2%. Okay. For ways and means advances, the interest rate is repo rate only. What is the current repo rate? That also tell me what is the current repo rate. Okay. The RBI may float fresh market loans when 75% of the WMA limit is utilized. So when 75% of the WMA limit is utilized, then the RBI can float fresh market loans or can take fresh market loans on behalf of the government. So second and third statements are incorrect. That's why the right answer here is 1 only. That's why D is the right answer. Yes. So particularly the repo rate is 5.5% currently. So repo rate is 5.5% currently. Okay. So this is the idea, and here the right answer is D. So ways and means advances for the second half is 50,000 crores. This is the limit that has been set, and ways and means advances, interest rate is repo rate, overdraft interest rate is 2% above the repo rate. Next question is, Reserve Bank released the results for 2024-25 round of its survey on international trade in banking services. Okay, so basically Indian banks, they provide the banking services by setting up subsidiaries or branches in the other countries, and the foreign banks, they provide the services, banking services to India by setting up subsidiaries or branches in India. Okay. So basically, how much services we are providing outside, how much services foreign banks are providing in India, for that a survey happened. And as per the survey, branches of Indian banks in dash among operating economies generated highest fee income for the branches in Indian banks overseas. So it is Hong Kong. Okay. So branches of Indian banks in Hong Kong generated highest fee income, while the lowest fee income has been generated from the United Kingdom. So this is the idea. So here, of course, all the data you cannot remember right now. So try to read the data once. If you are able to remember, fine. If you are not able to remember, at least remember the consolidated balance sheet data. So consolidated balance sheet of overseas branches and subsidiaries of Indian banks registered a growth of 9.1% and 4.2%. So overseas branches balance sheet has improved by 9.1%, and subsidiaries, overseas subsidiaries of Indian banks, their balance sheet has improved by or has grown by 4.2%. Okay, as well as try to remember this data that branches of Indian banks in Hong Kong generated highest fee income for the Indian banks, and the fee income was lowest from the branches of the Indian banks in United Kingdom. Chalo. Try to answer the next question, that is, as per RBI's direction, what is the maximum amount a depositor can withdraw from Bhagat Urban Cooperative Bank Limited? So basically there is a restriction that has been imposed on the Bhagat Urban Cooperative Bank Limited of Solan, Himachal Pradesh. Okay, so there is a restriction that has been imposed from 8th October 2025. Now it has been said that if a depositor wants to withdraw the money, the maximum amount that can be withdrawn by a customer or depositor is 10,000. Very good. And DICGC has ensured all the deposit of the Bhagat Urban Cooperative Bank if the individual has the deposit in the Bhagat Urban Cooperative Bank up to the limit of, so what is the insurance that is provided by DICGC for a single bank customer or for a single depositor? The deposit is for 5 lakh rupees. Okay, for a single, yes, for individual customers, okay, or for the accounts. So this is the idea that the maximum amount a depositor can withdraw from Bhagat Urban Cooperative Bank is 10,000 rupees. Okay, as well as it has been said that the DICGC has insured the deposits with the Urban Cooperative Bank, and for per depositor, the deposit that has been insured is 5 lakh rupees. So this is the idea. Basically, Bhagat Urban Cooperative Bank, there are restrictions that have been imposed since October 8, 2025. The Bhagat Urban Cooperative Bank cannot grant or renew any loans. It cannot take any new liability. It can only do the basic expenditure of giving the salaries and electricity bill, water bill and such. As well as the depositors cannot withdraw more than 10,000 rupees. Okay. Chalo, coming to the next question. Under the revised RBI guidelines, the SRVA's balances, okay, the special rupee Vostro account, balances can now be invested in which of the following? So basically it was said that special rupee Vostro account, it is for the trade settlement between two countries in the INR. So the Indian banks can open the special rupee Vostro account for the correspondent foreign bank, okay. The correspondent foreign bank can take the rupees for the trade settlement and can pay this rupees for the trade settlement to India. Okay. Now, if there is any surplus of rupees that is present in the special rupee Vostro account, that can be used for non-convertible debentures issued by the Indian banks. Okay. So the surplus rupee that is left in the special rupee Vostro account after the trade settlement, then this surplus rupee can be used in investment in the non-convertible debentures issued by Indian companies, or this surplus rupee can be used to purchase or to invest in bonds issued by Indian companies, or to invest in commercial papers issued by the Indian corporates, or this surplus rupee can be used to invest in government securities, including the treasury bills. Got it? So the surplus amount from the special rupee Vostro account can be invested in bonds issued by Indian companies, commercial papers issued by the Indian corporates, or the non-convertible debentures issued by the Indian companies, or the government securities or T-bills. Okay, so surplus amount from special rupee Vostro account can be invested in these securities or these instruments. Try to answer this question now. So as you know that there is the capital that the banks have to maintain, against the risk-weighted asset. So the capital can be maintained in tier 1 capital, that is the liquid capital, or tier 2 capital, that is not so liquid capital. In the tier 1 capital, there is common equity tier 1 capital, that is the most liquid capital that the bank can use during the distress situation. In the tier 1 capital, there is also AT1 capital, that is additional tier 1 capital. So additional tier 1 capital can be in the form of perpetual debt instrument. These are the instruments that do not have a maturity period. They keep on giving you interest, but they have no maturity period. So when the principal will be returned, there is no set date. Okay. So 81. It has been said, as per the revised RBI directions effective from October 1, 2025, what is the maximum eligible limit for the perpetual debt instruments in the additional tier 1 capital? So the perpetual debt instrument, what is the maximum eligible limit? It is 1.5% of the risk-weighted asset. Okay. So perpetual debt instrument, the maximum limit is 1.5% of risk-weighted asset to be included in 81. So this is the answer, and this is the whole article. So you can understand that for all the scheduled commercial banks, small finance bank and payment bank, the perpetual debt instrument, they are 1.5% of the risk-weighted asset. Okay. In the additional tier 1 capital, that is the maximum limit. Chalo, coming to the next question. As per the amended lending against gold and silver collateral directions 2025, who may extend working capital? So recently there is an amendment that has come. So the lending against gold and silver collateral directions, they were released in June 2025. So there is recent amendment that has been added. So previously it was said that the gold loans or the loans can be taken against the gold or silver collateral only when the gold or silver is in the form of ornaments or coins. That also, the ornaments and coins have a limit. that can be given for the collateral. Now it has been said that there are certain banks that can provide working capital finance to the manufacturing units or the industrial processing units that are using gold or silver in their manufacturing. So working capital finance can be provided against gold or silver that is used as input in manufacturing. Other than ornaments or coins, there are the gold or silver that is used as input in manufacturing. So against these collateral also there can be working capital finance that can be provided. So this working capital finance can be only provided by scheduled commercial bank or the tier 3 or tier 4 urban cooperative bank. So here the right answer is 3 and 4, and such kind of questions we have seen in the phase 1 of the RBI Grade B 2024 examination, where multiple options will be given, 6, 7, 8 options will be given, and you have to select that which institutions are applicable here. Okay, so such kind of questions has been seen in the last year. That's why I have brought such question. Chalo. So here basically the amendment has happened in the lending against gold and silver collateral. Before it was said that only the ornaments and coins can be kept as collateral, that also till to a limit can be kept as collateral for giving the loans. Now it has been said that the scheduled commercial bank as well as tier 3 or tier 4 urban cooperative bank may extend need-based working capital finance to the borrowers who use gold or silver as raw material in their manufacturing or in their industrial processing activity. For such gold or silver, so this kind of gold or silver can be given as collateral, that is the input in the manufacturing process. Okay, a bank extended such finance shall ensure that borrowers do not use this loan for investment or speculative purposes. Okay, so this is the idea. As well as the purchase of gold. If you want to purchase the gold, you cannot take a loan to purchase the gold. For any kind of gold, if you want to purchase, you cannot take a loan for purchasing the gold. As well as if you are giving the ornaments or coins as collateral, you can give these, but you cannot give the primary gold or primary silver. That means you cannot give bullions. You cannot give bullions for taking the loan. This is the idea. Chalo. Now moving forward, a new provision has been inserted which allows banks to reduce other spread component for a loan category earlier than the standard dash period. So it was said basically that if you want to retain your customer, let's say your customer want to shift the loan from State Bank of India to SDFC Bank. So now the State Bank of India will have to reduce its interest rate to retain the customer. So State Bank of India is charging the base rate of 6% and the spread of 2.5%, while SDFC Bank is charging the base rate of 5.7% and the spread of 2.25%. So State Bank of India can reduce this spread rate, cannot change the base. Base cannot be changed ever, but the spread rate, additional rate can be changed. Okay, so this reduction that can come in the spread component, this can come now before the 3-year time period. So before it was said that if the bank has to reduce the spread rate can only be increased, can only be reduced after 3 years. But now it has been said that it can be reduced before that also. So before 3 years also the spread rate can be reduced. So this is the basic idea, that there are amendments that have happened in the interest rate. A new provision has been inserted which allows banks to reduce their spread component for a loan category earlier than the standard 3-year time period. Okay. Now next is, it was also said that the banks on their own merit, the banks at their own discretion, if the floating interest rate is changing, repo rate is increasing, let's say with the increase in repo rate, interest rate is increasing, so the floating rate is increasing for the loans. Okay, so the banks can provide at their discretion, they can provide the customers the option to shift from floating rate to the fixed rate, rate. So this is the basic idea. Okay, now try to answer this question. So All India House Price Index, there are various changes that have been recently brought in the All India House Price Index, that is the quarterly survey that happens. Okay, so what are the major changes or what is the update that has happened, that you have to tell me. So RBI released the house price index for quarter 1 2025-26 with new base year. So the new base year for this All India House Price Index is 2022-23. Okay, 8 new cities have been added to existing 10 cities in the new series. So this is correct. All India House Price Index has increased by 3.6% for the first quarter of the financial year as compared with the 7.6% of the first quarter of the last year. So this is also correct, that all India House Price Index has increased by 3.6%. So second and third answers are correct, or second and third statements are correct. Okay, that's why the answer here is B. Or you had to tell the correct statements now, so B is the right answer here. Okay, the A statement is incorrect because the new base year is not 2021-22, it is 2022-23. So house price index, basically the new base year is 2022-23. Remember this, it is important. A major change has happened because the index base year has been changed. Okay, 8 new cities have been added in addition to the existing 10 cities, and the house price index has increased by 3.6% in the first quarter. Okay, in comparison to the first quarter of the last year. If we compare the sequential quarter on quarter, so that means quarter 4 of the previous financial year and the quarter 1 of the current financial year, we are just comparing the last quarter with the current quarter. So then 2% of the increase has happened in the house price. If we compare the current quarter with the last year, quarter 1, so then there is increase of 3.6%. So coming to the next question. Q on Q means quarter on quarter, that from last quarter to current quarter. Okay, but this percentage is for current first quarter and the previous year first quarter. Chalo, try to answer this now. As per the 2025 RBI directions, what is the threshold limit for allowing simplified claim settlement without a nominee or survivorship clause in deposit accounts for deceased customer? So for deceased customer, if there is a deceased customer, the deposit account or the safe locker amount, this has to be provided to the nominees. Okay, nominee or survivorship. In the case of joint accounts, let's say X person died, Y person is alive. Okay, so if there is a survivorship clause, so that basically says that if the X dies, the amount of the joint account will go to the Y person. So that is the survivorship clause. Okay, so nominee, without a nominee and without a survivorship clause, who will get the money? So there is a threshold, like who will get the money. So that depends upon the legal heir, or that depends upon the legal heirs documents and such. So what is the threshold limit for allowing simplified claim settlement without a nominee? If there is no nominee, if there is no survivorship clause, then there should be a simplified claim procedure up to the amount of 5 lakh for the cooperative bank accounts and 15 lakh for other banks, for the scheduled commercial bank basically. Okay, so basically it has been said that there should be a simplified claim procedure that has to be followed so that the legal heirs or the decedents, they can get the money in an easier way if the threshold amount is up to 5 lakh for cooperative banks and 15 lakh for the non-cooperative banks or for the scheduled commercial bank. Okay, so this is the Reserve Bank of India settlement of claims in respect of deceased customer of bank directions 2025. So if the bank customer dies, deceased customer, then in this case the money should be released to the customers in an easier manner, as well as a standard process has been released by the Reserve Bank of India. So simplified procedure is allowed for claims below threshold limit, that means 5 lakh in case of cooperative banks and 15 lakh in case of the scheduled commercial bank or the other banks. Okay, or such higher limit as decided by the banks. So this is the case. Okay, next is, so these are the details that you can give a read. Now coming to the next question, that according to the RBI directions, what is the penalty imposed on banks for delay in settling claims? Let's say you have deposited or you have given the documents. Okay, you have submitted the documents. So if you have submitted the documents, the right documents have been submitted for the deposit account, release of funds, the submission of documents have been completed. So the deposit account amount has to be released within 15 days of submitting the document. Okay, if you have submitted the documents for the safe locker, so within 15 days the date has to be decided. The date has to be decided that when the locker material will be given to the customer. Okay, if let's say within 15 days the deposit amount is not given to you, is not given to the nominee or the survivor, or let's say within 15 days the date is not decided, or let's say on the date the locker material is not given to you, so then there are some there are some compensation that has to be given by the bank. Okay, so what is the penalty imposed, or what is the compensation that has to be given by the bank for delay in settling claims related to lockers or safe custody articles beyond the prescribed period? So here it is 5,000 per day. 5,000 per day is the penalty amount, that has to be given. Okay, so this is the idea. So here you can see that if the documents have been submitted, then for the deposits, the settlement should happen within 15 calendar days of receiving the complete documents. For locker or safe custody, if the documents have been submitted properly, then within 15 days the bank must process the claim, and bank must decide a date for giving the inventory or for giving the material to the legal heir or to the nominee or survivor. Okay, so this is the idea. In case the deposits are not given within the 15 days, interest at bank rate plus 4%. This is the compensation that has to be given if within 15 days the amount is not released for the customers. Okay, lockers or safe custody penalty. So a compensation has to be given for delay within 15 days. Let's say the date has been decided, but on the date the inventory was not given to the customer, so the penalty has to be given 5,000 per day for delay that has happened. So the rest of the things you can read, give it a read. This is a recent direction that the RBI has released. Okay, what was the India's international assets to international liabilities ratio as of June 2025? So for June 2025, what is the international asset to international liability ratio? So recent data has been released. So try to answer this question. So for March 2025, the international asset to international liability, the data was 77.6%. That has increased in June 2025 to 79.2%. Okay. So the answer here is D. So from March 2025, the international assets to international liabilities were 77.6%. That has increased to 79.2% in June 2025. Okay, so this is the idea. Now, what was the ratio? So the rest of the data you can read, but this is the most important data that you have to keep in mind, as well as inward direct investment, loans, currency and deposits together constituted around 90% of the rise in foreign liabilities. So foreign liabilities, that means the money that we have to return, has been mainly in form of inward direct investment, loans that we have taken, currency and deposit, share of debt liabilities in total external liabilities. So debt liabilities to total external liabilities, this has declined marginally to 54.8%. So this is the most important data that you have to remember from this article as well as this. That is important. Okay. Now going forward with the next question, what was the ratio of short-term external debt by original maturity? So short-term external debt by original maturity to foreign exchange reserves at the end of June 2025. So try to answer this question. Okay. So let's see that how many of you are aware about this. So external debt to, yes, here the right answer is 18.3%. The question is about short-term external debt to foreign exchange reserves. So answer here is D actually, 19.4%. Okay. So let's see the data that you have to keep in mind from this article. So particularly remember that the external debt to GDP, this has reduced from March to June 2025 from 19.1% to 18.9%. Okay. Next important data is that the short-term debt with the original maturity to the total external debt, this has reduced from 18.3% to 18.1%. Okay, short-term debt on original maturity to foreign exchange reserves, this has reduced from 20.1% to 19.4%. Now the short-term debt on residual maturity basis means that the original maturity is 1 year. The original maturity short-term debt is 1 year short-term debt, as well as long-term debt that have the residual maturity, long-term debt that have left the 1 year of maturity. So short-term debt on residual maturity basis, so basically their short-term debt on residual maturity basis to the external debt, this is 40.7%, and short-term debt to foreign exchange reserves on residual maturity basis, this is 43.6%. Okay, so these are some of the data points from such kind of short-term debt to external debt or short-term debt to foreign exchange reserves. From this kind of data. A question has come in the last year. That's why this becomes a little important that you have to keep in mind. So these are the 5 data points. If you are not able to remember all the data points, at least keep in mind these data points. Okay, try to remember this if you can. Otherwise, leave it, because even if like out of 80 questions, you do not have to attempt all the 80 questions. Focus on attempting 40 to 50 questions in a good manner. Okay, so if you have not like remember, or if you have not studied a data point and you think that it will make you more confused, do not go after that data point, because right now covering more is less important. Covering whatever you have covered right till now and revising it and practicing, that is more important. So whatever you have covered, focus on that. The new data points, forget about it. At the end of June 2025, which currency accounted for the largest lowest share in India's external debt? So India's external debt has been the highest in terms of US dollar, then Indian rupee, then Japanese yen, then SDR, then the euro. Okay, so 3, 1, 4, 2, 5. 3, 1, 4, 5, 2, sorry, 5, 2. 3, 1, 4, 5, 2. So this is the idea. So this you have to remember: US dollar, then Indian rupees, then yen, SDR, and euro. Okay, so this is the order in which the highest to lowest debt we have taken from in the form of external debt. External debt we have taken in the form of highest to lowest: US dollar, Indian rupee, yen, SDR, euro. The share of outstanding debt is highest for non-financial corporations, that are non-financial corporations, then deposit taking corporations except central bank, then general government, then other financial corporations. Okay, and the external debt is highest in the form of loans, then the currency and deposit, then the trade credit and advances and debt securities. So the external debt is highest in form of loans, then currency and deposit, then trade credit and advances, and then the debt securities. Okay, chalo, coming to the next question, that is about the SRO NBFCs, self-regulatory organization, non-banking financial companies. So basically RBI has recently announced that there is a SRO, self-regulatory organization, for the non-banking financial company that has been selected. So SRO, they are the linkage between the regulated entities and the Reserve Bank of India. So SRO NBFC has been chosen recently. Okay, for the NBFC sector. So SRO for NBFC sector is primarily for NBFCs in the category of investment and credit company, housing finance company, and factors. Absolutely correct. So the SRO NBFC has to focus on these 3 categories: investment and credit company, housing finance company, and the NBFC factor. To ensure fair representation to the smaller NBFCs, the SRO shall have at least 20%. 20% is wrong. So to ensure fair representation to the smaller NBFCs, the SRO shall have at least how much percentage of the total number of NBFCs from the base layer, especially the NBFC investment and credit company and NBFC factor. Okay, NBFC housing finance company, it can never come in the base layer. It can come in middle layer or above. Okay, so NBFC investment and credit company, NBFC factors that can come in base layer, they should have at least 10%. Yes, at least 10% of representation in the membership. The applicant should achieve a minimum net worth of rupees 2 crore within a period of 1 year. Okay, it has been decided to recognize FIDC as SRO for NBFCs. This is correct. So first is correct and fourth is correct. The answer is E here. The answer is E here. Very good, everyone. So all of you who are giving the right answer, the E is the right answer, and very good to see that you remember the nitty-gritties. Okay. Now this is what we have discussed. The SRO has been chosen, that is the FIDC has been chosen as the SRO NBFC, and these are the criterias that we have discussed in a previous session. Now, so basically the SRO NBFC should have the membership from the investment and credit company, housing finance company, and the NBFC factor. At least 10% of the members should be from the base layer, from the ICC and the factors that are in the base layer. So the investment and credit company and the factors, they can come in the base layer, they can come in any of the layers, but housing finance company, it can be included in middle layer or above only. Okay, as well as 2 crore, this is the minimum net worth requirement for the SRO. Okay, for the SRO, minimum 2 crore is the minimum net worth requirement for the SRO NBFC particularly. For the SRO in the financial market, what is the minimum net worth requirement? Can anyone tell me that SRO in the financial market, what is the minimum net worth requirement? Is it 2 crore, 5 crore, 10 crore, 15 crore? It is 10 crore for the SRO in the financial market. Okay. Chalo. Yes. Coming to the next article, that is the Monetary Policy Committee held its 57th meeting from September 29 to October 1, 2025 under the chairmanship of Sri Sanjay Manotra, Governor of the Reserve Bank of India. Which of the following statement is or are correct in regards to the Monetary Policy Committee, October 2025? So first of all, MPC voted unanimously to keep the policy repo rate unchanged at 5.5%. Absolutely correct. The real GDP growth for 2025-26 is now projected at 6.8%, lower from 6.5%, higher from 6.5% that was projected before. The CPI inflation for 2025-26 is now projected at 3.1%, that is lower from 2. Is now projected at 3.1%, that is incorrect. Okay, actually CPI inflation for 2025-26 is now projected at 2.6%. Okay, that is lower from the earlier 3.1% of projection. India's external debt to GDP ratio has moderated to 18.9% at the end of June 2025 from 19.1% at March end 2025. Okay, so first is correct, the second is also correct, the third is wrong, because the CPI inflation for 2025-26 is now projected at 2.6%, not 3.1. India's external debt to GDP, this is correct. All the other statements are correct, and that's why the right answer here is 1, 2 and 4, that is D. So right answer here is B. So MPC has said that the repo rate will be kept at 5.5%. So SDF is at what percentage? The MSF and the bank rate is at what percentage? The real GDP growth forecast has been increased from 6.5% to 6.8%. CPI inflation forecast for 2025-26 has been decreased from 3.1% to 2.6%. Okay, so SDF is currently 5.25% and MSF and bank rate is currently 5.75%. Chalo. Moving forward, so do read, we have discussed the Monetary Policy Committee and these are the important points that you have to keep in mind. So India's current account deficit to GDP. Current account deficit as a percentage of GDP is how much? For the first quarter, that is by the end of June 2025. Is it 0.1% of GDP, 0.2%, 0.3%, 0.5, 0.6? It is 0.2% of GDP. So current account deficit as a percentage of GDP by the end of June 2025, it was 0.2% of GDP. So for quarter 1, it was 0.2% of GDP. Okay, as well as current account deficit, the current account deficit as a percentage of GDP for 2024-25. If we talk about the yearly data, current account deficit as a percentage of GDP for 2024-25 was how much? Monetary policy statement has to be read for October, and for CPI you can read for the latest month. Okay, yes, 0.6% of the GDP. So current account deficit as a percentage of GDP for 2024-25 was 0.6% of GDP. Okay, so this is the idea. The rest of the data you can read. The data has been given for scheduled commercial bank and such, but again, if you have not gone through this data, no worries. Do not focus on the new data right now. Focus on revising the earlier data that you have already covered. Okay, so this is the idea. Chalo. Coming to the next, so here you can remember that May 2022 it was decided to increase the repo rate, and February 2023 till February 2023 there was increase in the repo rate that happened. From February 2023 the repo rate was kept constant then, and from February 2025 it was decided to decrease the repo rate. Considering the growth inflation dynamics, it was decided in October 2024 to shift from withdrawal of accommodation to neutral. Withdrawal of accommodation basically means that either we will keep the repo rate constant or we will increase the repo rate. Withdrawal of accommodation means that either we will increase the repo rate or we will keep the repo rate constant. In October 2024, it was decided that we will shift from withdrawal of accommodation to neutral. That means we can keep the repo rate constant, we can decrease the repo rate, we can increase the repo rate. In April 2025, it was decided that we will shift from neutral to accommodative. Accommodative means that we can decrease the repo rate or we will keep the repo rate constant. Okay. In June 2025, it was decided to shift from accommodative to neutral. Again. So this is the history kind of thing, because if a question comes, it has previously come from the history, or it has come from the previous steps that have been taken. Okay, so in October 2024 the decision was taken to shift from withdrawal of accommodation to neutral. Then in April 2025 it was decided to shift from neutral to accommodative. Then in June it was decided to again shift from accommodative to neutral. Okay, now it was decided in the recent Monetary Policy Committee October meeting, it was decided to keep at neutral only. Now, coming to the next question, consider the following statements regarding the eligibility and conditions for a small finance bank to transition into a universal bank. So, recently AU Small Finance Bank has got in principle approval to transition from the small finance bank to the universal bank criteria. What are the conditions for transitioning from the small finance bank to universal bank? So, minimum net worth of 1000 crores, this is correct. Scheduled status with a satisfactory track record of 5 years, correct. A net profit in the last 3 financial years, wrong. Gross non-performing asset of less than or equal to 2%, wrong. Net non-performing asset of less than or equal to 1% in the last 2 financial year. So instead of 3 years, the net profit for 2 financial years there should be, as well as gross non-performing asset should be less than or equal to 3%. Okay, and net non-performing assets should be less than or equal to 1%. So here you had to tell which of the following statement is or are, or which of the above statement is or are correct. So basically first and second statements are correct, or incorrect, sorry, incorrect. So third and fourth statements are incorrect. Okay, so the right answer here is C. Right answer here is C. Which of the following statement is or are incorrect? So third and fourth are incorrect. Okay, so here these are the criterias for transitioning from the small finance bank to universal bank, and I hope you remember the criterias very clearly, because these are very important. We have discussed them again and again. This was also mentioned in the annual report also. Okay, so chalo, coming to the next question. So basically the theme neutral, the fifth cohort, under the fifth cohort theme neutral, the RBI's regulatory sandbox, which entity's product has been found viable and has successfully exited the cohort. So regulatory sandbox, where the live testing happens of the new financial products or the new financial services under the regulation of the Reserve Bank of India. So basically the successful exit has happened from the fifth cohort of which entity? It is, yes, IBDIC, that is Indian Banks Digital Infrastructure Company, which has successfully exited from the fifth cohort with its product blockchain-based deep tier financing solution, enabling MSMEs to access affordable finance. Okay, so here the right answer is D. So theme neutral, this cohort has finished and the testing has finished under this, and the IBDIC, it has successfully exited the fifth cohort, and the partner financial institutions were ICICI Bank, HDFC Bank, Yes Bank and Aditya Birla Capital Limited. So these were the partner financial institutions. Okay, now on tap facility has been provided on theme neutral. That means now the continuous innovations can happen under the theme neutral, and the continuous testing can happen, the continuous testing can happen in the regulatory sandbox. So on tap facility has been provided on theme neutral. That means now under the regulatory sandbox there can be continuous testing can happen under the theme neutral cohort or under the theme neutral. Okay, now try to answer this question, that with reference to the newly issued RBI co-lending arrangement directions 2025, consider the following statements, and you have to tell me that which of the above statements is or are correct here. So read the statements very, very carefully and try to answer this question. So the directions will apply to co-lending arrangements entered into by commercial banks, excluding small finance bank, local area bank and RRBs, all India financial institutions and NBFCs, including housing finance company, yes. Loans sanctioned under multiple banking, consortium lending or syndication are under the scope of these directions. These directions are only for co-lending. They are not for multiple lending, for multiple banking, consortium lending or such. Okay, so loans sanctioned under the other categories, they are not under the regulation of these directions. Okay, so incorrect. Each regulated entity must retain at least 10% of every loan under a co-lending arrangement in its book. So each regulated entity that is signing the co-lending arrangement must retain at least 10% of every loan under a co-lending arrangement. So this is correct. Originating regulated entity can provide a default loss guarantee up to 5% of the loan outstanding. So second statement was wrong, fourth statement was wrong, first and third were correct, and that's why the right answer here is A. That is 1 and 3. So we have discussed co-lending arrangements again and again. The applicability is important, as well as the default loss guarantee is important. Each regulated entity has to have minimum 10% of share in the loan portfolio, okay? As well as the co-lending arrangement, once it has been signed, so within 15 days, so originating regulated entity has to transfer the share within 15 calendar days to the participating regulated entity, okay? So co-lending arrangement shall ensure that the respective shares of the regulated entities are reflected in the books of both regulated entities not later than 15 days or within 15 calendar days. Now coming to the next question, that is in regards to the survey. So survey happened regarding foreign liabilities and foreign assets of the mutual funds and the asset management companies. Now in regards to this survey, as per the results of the survey, non-residents of UAE, United States of America, United Kingdom and Dash held the largest share in mutual fund units, both in terms of face value as well as market value. Yes, Singapore. Very good. So it is Singapore. Here the answer is, so US. So these entities, they were holding largest share in the mutual fund units, okay? So it is US, UAE, UK and Singapore. So it is Singapore, okay? So this is the idea. So US, they were holding the largest share in mutual fund units, UAE, US, UK and Singapore. While the overseas equity investment that has been done by mutual funds, that means the mutual funds have done the investment mostly in USA, Luxembourg and Ireland, okay? So this is the idea. Now moving forward with the next question. So basically a discussion paper has been released by the Reserve Bank of India on review of monetary policy framework. Okay, so it was said that the inflation targeting or the inflation target will be reviewed once in every how many years? Once in every 5 years. So the right answer here is B. The right answer here is B. So RBI has released the discussion paper on review of monetary policy framework. As per the section 45ZA of the RBI Act 1934, the central government shall in consultation with the Reserve Bank of India determine the inflation target that has to be reviewed once in every 5 years. Okay, so this is the idea. So basically in May 2016, the RBI Act of 1934 was amended to provide the legal framework for the flexible inflation targeting, and the target was decided at 4% plus minus 2% from 2016 till 2021. From 2021 to 2026, it was said that we will maintain the same target till March 2026. Now as March 2026 is very near, so now the review will happen for a new inflation target. Okay, so currently the inflation target is 4% within the range of plus minus 2%. Okay, within the range of 2% and 6%. Now it has been decided the second review of the target will happen as the inflation target has to be renewed after March 2026. This is the idea. Now coming to the next article, that is regarding your CTS check truncation system. Try to answer this. So RBI has decided to transition the check truncation system to continuous clearing so that the continuous clearing and settlement can happen of the checks. Now it has been said that this check truncation system will be transferred to the continuous clearing and settlement in 2 phases. Phase 1 shall be implemented from October 4, 2025 and Phase 2 shall be implemented from January 3, 2026. There shall be single presentation session. That means if you are depositing the check, you have to deposit the check between 10 a.m. to 4 p.m. Very good. 10 a.m. to 4 p.m. So here the right answer is E. So check presentation should be from 10 a.m. to 4 p.m. Confirmation of the check, that is positive confirmation or negative confirmation that the check is honored or the check is dishonored. This kind of confirmation has to be given by 7 p.m. from 10 a.m. to 7 p.m. Okay. Now the next question is that in the phase 1, during the phase 1, drawee bank that is providing the confirmation shall be required to confirm positively or negatively that the check is honored or dishonored latest by what time? By 7 p.m. Very good. So the confirmation of the check has to be given by 7 p.m. in the phase 1. In the phase 2, the confirmation of the check has to be given within T plus 1 hours or T plus 2 hours or T plus 3 hours or T plus 4 or T plus 5 hours. In the phase 2, the confirmation regarding the check has to be given within T plus 1, T plus 2, T plus 3 or T plus 4 or T plus 5 hours. So in the phase 2, the confirmation for the check has to be given by T plus 3 hours. Remember this, okay? So here the right answer is In the phase 1, the confirmation has to be given by 7 p.m. So in the phase 1, the confirmation has to be given by 7 p.m. while in the phase 2, the confirmation has to be given within T plus 3 hours. Within T plus 3 hours, okay? Now, coming to the next question, that the Reserve Bank released its web publication entitled Quarterly Basic Statistical Return on Credit by Scheduled Commercial Bank June 2025 on its database on Indian Economy Portal in line with monetary policy actions. So Quarterly Basic Statistical Return 1, so BSR 1 has been released. This shows the credit data in line with the monetary policy actions. As the repo rate is being decreased, so the interest rate is also decreasing in the economy. So the weighted average lending rate is declining by 39 basis points. 39 basis points during April to June 2025. Okay, so the weighted average lending rate has declined by 39 basis points during April to June 2025. So this is the answer. Okay, so here the quarterly basic statistical return 1 basic data is this, that the bank credit growth has happened by 9.9% from April to June 2025. Okay, as well as the weighted average lending rate has decreased by 39 basis points, that is by 0.39% in this timeline of April to June 2025. This is the idea. Okay, now coming to the next question, that is regarding your quarterly basic statistical return 2, that shows your deposit. Okay, so bank deposits with scheduled commercial bank registered a growth of dash percentage as at the end of June 2025 as compared with 11.7%. Yes, here 11.3% is the right answer. So BSR2, basically the quarterly data is saying that from April to June, there is the increase in or growth in the deposits by 11.3%. Okay, so basic statistical return 2, that shows the deposit growth, So here you can see that the growth has happened in the deposits by 11.3% at the end of June 2025. Okay, so the rest of the data that has been underlined, that you can read once, and remember that the top 5 states or union territories were Maharashtra, Delhi, Karnataka, Uttar Pradesh and Tamil Nadu. Collectively, these accounted for 54.3% of total deposits from the households. Okay, 54.3% of the total deposits and 47.8% of the household deposits. So from these 5 areas, basically Maharashtra, Delhi, Karnataka, Uttar Pradesh and Tamil Nadu, 54.3% of the total deposits have come and 47.8% of the household deposits have come. So that is a big deal. That is a important point. Now coming to the next question, that is regarding your non-fund based credit facilities directions 2025. Okay, so try to answer this. Now I will also suggest you that do see the selection marathon also, if you have not seen till now. Okay, now try to answer this question. So non-fund based credit facilities directions 2025. So as per the Reserve Bank of India, non-fund based credit facilities, which of the following statement is incorrect? So scheduled commercial bank excluding RRBs, all India financial institutions, NBFCs, middle layer and above, including housing finance companies, they are entities that are allowed to provide partial credit enhancement. That is correct. Okay, partial credit enhancement exposure limit by a single regulated entity is 50% of the bond size, correct, and the total limit is also 50% of the bond size. This is the total limit for all the regulated entities towards the partial credit enhancement. So this is also correct. Total volume of guaranteed obligations. So basically the urban cooperative banks, regional rural banks, local area banks, state cooperative bank and central cooperative bank, they can provide the guarantees up to the limit of 5% of their total asset. It is not 10%, it is 5%. So here third is wrong and the incorrect. So 3 is only the incorrect statement. That's why E is the answer here. Okay, E is the answer here. So we have discussed again and again in your selection marathon also, in the session also, we have discussed about non-fund based credit facility. I have taken a detailed session. You have to remember the important data points, that the guarantee, for the guarantee there is the limit of 5% of the total assets, and for unsecured guarantees there is a limit of 1.25% of the total assets. Okay, then we have discussed about partial credit enhancement. Who can give the partial credit enhancement? For what the partial credit enhancement can be given? What is the limit on per bond size? So all of this are the important data points that you have to remember, and the partial credit enhancement can be given for such bonds that have the pre-enhanced rating of BBB minus or above. Okay, or the credit rating should not be below BBB minus basically. Now, this is the criteria, or this is the applicability for the guarantees. Guarantees cannot be given by the NBFCs. Guarantees can be given by commercial bank, primary urban cooperative bank, all India financial institutions. The NBFCs, including housing finance companies in middle layer and above, they can only provide the non-fund based facility, that is the partial credit enhancement. That's it. Okay. Now coming to the next question, try to answer this question. This is also about the PC. A selection marathon has also already happened, and it is in YouTube. It has got more than 40,000 views, and that is also a very important marathon, because there we discuss important reports, RBI notifications, and we discuss the schemes also. So there we discussed more in detail. Okay, here it is going in rapid fire, but that session is also important because there were different questions in that. Okay, so do see the selection marathon also. So here everyone is saying E, and that is the correct answer. So the aggregate partial credit enhancement exposure of a regulated entity shall not exceed the total partial credit enhancement of a regulated entity for all the bonds should not exceed 20% of the tier 1 capital of the regulated entity, and the tenure of the bond issued by NBFCs or housing finance companies for which partial credit enhancement is provided shall not be less than 3 years. Okay, so this is the right answer, 20% in 3 years. Now, coming to the next article, all of these details have been given. Go through it once. The Rural Consumer Confidence Survey conducted by RBI collects households' perceptions and expectations on all of the following except. So, which is the correct answer for this? So, I'm getting the answer D. Try to read the question carefully. Yes, the right answer here is E. The right answer here is E, interest rate expectations. Okay, so basically the Rural Consumer Confidence Survey collects the household perceptions and expectations on all of the following except the interest rate expectations on which the survey is not conducted from the RCCS. Okay, so basically the Rural Consumer Confidence Survey, it collects the data on the general economic situation, employment scenario, overall price situation, own income and spending. It does not collect the data for the for the interest expectations and such. Okay, so this is the idea. Now the survey is conducted. The Urban Consumer Confidence Survey, it is conducted regularly in how many cities? It is conducted in how many cities? It is conducted in 19 cities basically. Actually, a question has come in the RBI Grade B 2024 examination where there were the names of the cities that were asked. The cities were given and it was asked that which of the following cities is not among the cities in which the survey happens. So such a question can happen, but if you are not able to remember the 19 cities, forget about it. Forget on the data that you can actually remember. Okay, so this is the idea that the Urban Consumer Confidence Survey as well as Inflation Expectation Survey of households, these happen in 19 cities, and these are the 19 cities in which the survey happens. Urban Consumer Confidence Survey, it collects the data for the 4 parameters, that is the general economic situation, employment scenario, price level, and households income and spending. Okay, as well as Inflation Expectation Survey of households collect the data, or survey happens, qualitative responses are taken from households on price changes. Okay, so it is Inflation Expectation Survey. So basically inflation perception, inflation expectation, and price changes, this kind of data is taken. Now coming to the next question, try to answer this question. So here, according to the Reserve Bank of India, Know Your Customer Directions 2025 for verifying the identity of the customers at the time of account opening or while carrying out occasional transactions, what is the minimum transaction amount at or above which regulated entities they have to do the KYC themselves, or they have to take the information themselves, or they can rely on customer due diligence done by third party. So basically, if they are opening the accounts, or if there is any occasional transaction that is happening, walk-in customer is there that does not have the account in the bank, but they want to do certain transaction through the bank, so walk-in customer is there. So in this case, what is the minimum transaction amount at or above which the bank has to do the KYC themselves, or they have to do the customer due diligence themselves, or they have to take the customer due diligence from the third party? So the amount here is 50,000. Okay, So this is the idea that the KYC amendment had happened, in which it was said that the bank, while carrying out the occasional transaction for the walk-in customer and such, if the amount exceeds or is equal to 50,000, in this case there is customer due diligence that is required. It can be taken from a third party also. Okay. Now try to answer this question. Free AI, this is a very, very important committee that was constituted, and the committee has given the report. So Free AI committee, this was for the artificial intelligence, and the committee was constituted under the chairmanship of Dr. Pushpak Bhattacharya. The committee has given the report, and the report has been shown by the RBI in its website. There are 7 key sutras given in the report, 6 strategic pillars under 2 broad categories. Okay, that is innovation enablement and risk mitigation. So in innovation enablement there are 3 strategic pillars. In the risk mitigation there are 3 strategic pillars. So governance, protection and assurance, these are 3 strategic pillars under the risk management. Okay, under risk management or risk reduction. Infrastructure, capacity and policy, these are the 3 strategic pillars under the innovation enablement. So innovation has to be done in the artificial intelligence, and risk has to be reduced. For risk reduction, governance, protection and assurance. For innovation enablement, infrastructure, capacity and policy. So regulations is not there, policy, capacity and infrastructure is there. Okay, so regulation is not one of the strategic pillar. That's why E is the answer. So Free AI committee report, I hope you have gone through the session that I have taken on Free AI committee report. At least try to remember that Dr. Pushpak Bhattacharya was the head of the, or was the chairperson of the Free AI committee. 7 sutras: trust is the foundation, people first, innovation over restraint, fairness and equity, accountability, understanding by design, understandable by design, safety, resilience and sustainability. These are the 7 sutras. There are 6 strategic pillars under the 2 categories, that is risk mitigation and innovation enablement. Under the risk mitigation there is governance, protection, assurance. Under the innovation enablement there is infrastructure, policy and capacity. Okay, this is the idea. Now try to answer this question. RBI DPI, I cannot inform you that how important this is, because in the last year, in the first in the morning shift, in the afternoon shift, in both the shift there were questions from RBI digital payment index. So try to answer this. So RBI has been publishing a composite Reserve Bank of India Digital Payment Index since January 1, 2021 to capture the extent of digitization of payments across the country. Which of the following statement is or are correct in regards to RBI DPI? First statement is correct. Our DPI Digital Payment Index for March 2025 stands at 493.22 as against 465.33 for September 2024. Okay, RBI DPI has been constructed with March 2018 as the base period. DPI Digital Payment Index score for the base year was 100. The increase in RBI DPI is because of which 2 factors? Can you tell me? What are the 2 factors because of which the digital payment index has improved from 465 to 493? It is because of payment infrastructure supply side factor and payment performance. Okay, so the third statement is wrong, and that's why the right answer is 1 and 2, that is C. Now in the digital payment index, which parameter has the highest weightage? Which parameter has the highest weightage? It is the payment performance. Okay, so payment performance has the highest weightage. After that, payment enablers. After that, payment infrastructure supply side. After that, payment infrastructure demand side, and consumer centricity. Remember this. Okay, next, coming to the next question, a small finance bank is required to extend 75% of the credit of the adjusted net bank credit to the priority sectors. Okay, small finance bank had to give 75% to the priority sectors, out of which 40% had to be given to the selected sectors under the priority sector as determined in the priority sector guidelines, while the 35% had to be given to the priority sectors as per the small finance bank decision. Okay, now this 35% has been reduced to the additional component of 35% has been reduced to 20%, and that's why the overall PSL target has reduced to 40% plus 20%, so that is 60%. So here the right answer is 20% and 60%. Okay, so now coming to the next question, that in regards to the frauds that is happening through the Aadhaar enabled payment system, it was said that there is more prudent guidelines that is required for the Aadhaar enabled payment system touchpoint operators that are operating the Aadhaar enabled payment system. In this regards, in cases where the Aadhaar enabled payment system touchpoint operator, they have remained inactive for a continuous period of dash, they need to have the re-KYC basically. Okay, so if they are inoperative for 3 months, basically if they are inoperative for continuous 3 months, then if they want to continue with the financial transactions or non-financial transaction through Aadhaar enabled payment system, they need to do the re-KYC. Okay, so this is the idea. So in cases where the Aadhaar enabled payment system touchpoint operators, they have remained inactive for not performing financial or non-financial transaction for a continuous period of 3 months, the acquiring bank, that is the merchant bank basically, they shall carry out KYC of Aadhaar enabled payment system touchpoint operators. Again, coming to the next question, Reserve Bank released data relating to India's international investment position for end March 2025. Over dash of the rise in the India's overseas financial asset was due to increase in overseas direct investment, currency and deposits and reserve assets. See, basically we have discussed the India's investment position, India's international investment position for April to June also. Previously, in the same session, in this session only, we have discussed the India's international investment position for April to June. Now here we are discussing for end March 2025. Okay, so do not get confused in the data of that and this. So here you have to remember that 72% of the rise that has come in India's overseas financial asset was due to increase in overseas direct investment, currency and deposit and reserve asset. So this is the idea. So this is the data that you have to keep in mind. And this was the data India's international financial asset to India's international financial liability. What was the percentage at the end of March 2025? This was 77.5%, which has recently increased to around 79%. Okay, in June 2025, it has increased to 79%. Okay, yes. So basically the India's international position, over 72% of the rise in India's overseas financial assets is because of overseas direct investment that we are doing, currency and deposits that we are doing in other countries, and overseas assets. India's international financial asset to financial liability currently was 77.5% in March 2025, which has increased to around 79% in June 2025. Okay, so this is the idea. Now moving forward, coming to the next question, that which of the following credit rating agencies was recently recognized by Reserve Bank of India as an eligible external credit assessment institution under Basel III framework for rating non-resident corporates from the IFSC. So basically banks, when they are providing loan to the corporates, the banks have to take the credit rating for the corporates. So now it has been said that the, yes, very good, CareEdge Global IFSC Limited, this is the external credit assessment institution that can provide the credit rating for the banks to give the loans to the non-resident corporates from the IFSC. Okay, so the CareEdge Global IFSC Limited, it can provide the credit rating for the non-resident corporates from the IFSC, and these credit ratings can be provided to the banks so that the banks can give loans to the entities according to the credit rating. So this is the idea. Okay, so here the CareEdge Global IFSC Limited has got the approval from the Reserve Bank of India to provide the credit rating for the non-resident corporates operating at IFSC, and these are the credit ratings that have been notified. Now coming to the next question, so it was said that it has been clarified by the Reserve Bank of India that the for non-collateral or for collateral free loans, agricultural loans and MSME loans, for collateral free loans there can be voluntary pledge of gold and silver that can happen. Voluntarily the pledge of gold and silver can happen. Now you have to tell me that loan limit for collateral free agricultural loans has been increased from 1.6 lakh to 2 lakh. Very good, to 2 lakh. For the micro, small and medium enterprises, what is the, or for the small and medium enterprises, for the micro and small enterprises basically, what is the collateral free loan limit? What is the collateral free loan limit? 10 lakh. Very good, very good. Okay, so basically it has been clarified that the voluntary pledge can happen for gold and silver as collateral for the agriculture and micro and small and medium enterprise loans, which are collateral free loans. So for these collateral free loans, the voluntary pledge can be done by the farmers or by the MSMEs. They can pledge their gold and silver, okay, to get easier terms and conditions or to get lower interest rate. Now, the collateral-free agricultural loans are up to 2 lakh per borrower, and for the micro and small enterprises, the collateral-free loans are up to the 10 lakh rupees. That is the idea. Now, coming to the next question. Try to answer this question. So RBI has released the Reserve Bank of India prepayment charges on loans directions 2025, which shall be applicable to all loans and advances sanctioned or renewed on or after January 1, 2026. A small finance bank, a regional rural bank, a tier 3 urban cooperative bank, state cooperative bank, central cooperative bank, and NBFC middle layer shall not levy any prepayment charges on the floating rate loans, with sanctioned amount or limit up to 50 lakh. Very good. Good to see that you are able to remember all of these details and the data points. Okay, these are the important data points that you cannot miss at all. So basically, a small finance bank, regional rural bank, tier 3 urban cooperative bank, state cooperative bank, central cooperative bank, NBFC middle layer, they shall not levy the prepayment charges on loans with sanctioned amount or limit up to 50 lakh for all the floating rate loans. Okay, so this is the idea. Now, prepayment charges, we have discussed that for floating rate loans, if the loans are given to individuals for other than business purposes, for non-business purpose, then there can be no prepayment charges that can be taken. Okay, for all the floating rate loans that is given for business purpose to individuals and micro and small enterprises, then the prepayment charges should not be taken by commercial bank, by the big banks basically, while the prepayment charges can be taken by the small banks if the loan limit is more than 50 lakh, then the prepayment charges can be taken. Okay, now try to answer this question. The Reserve Bank of India has issued the master direction, Reserve Bank of India electronic trading platform. So electronic trading platform can be provided by an entity if the entity has the minimum net worth of, very good, 5 crores. Yes, Abhigyan has given the answer. What about the others? Very good. Everyone is giving the right answer. So electronic trading platform can be provided by an entity. The entity seeking authorization as an electronic trading provider operator under these directions shall have a minimum net worth of 5 crores. Okay, shall have a minimum net worth of 5 crores. So basically, if you want to become an electronic trading provider, or if you want to become the electronic trading platform operator, then you need to have these criteria being met. The entity shall be company incorporated in India. The entity seeking authorization as an ATP shall have the experience, or at least they need to have the 2 key managerial personnel that have the experience of at least 3 years in operating trading infrastructure. So the entity that is seeking authorization as an electronic trading platform operator, they need to have the experience of at least 3 years in operating the trading infrastructure, or at least they should have 2 of its key managerial personnel that should have the experience of at least 3 years in operating trading infrastructure. Okay, the minimum net worth requirement for the ETP operator is 5 crores, as well as these are the additional details that you need to keep in mind, that all the ETP, electronic trading platform operators, they need to keep the data for at least 10 years. Okay, in case there is some investigation has happened, in that case the data should be kept for at least 3 more years. Okay, or at least 3 years from the date of investigation. So this is the idea. Now moving forward to the next question, try to answer this question. Yes, the Reserve Bank of India has now introduced a new set of norms titled Reserve Bank of India Project Finance Directions 2025. The provisions of these directions shall apply to the project finance exposure of which of the following regulated entities? So project finance directions have been released. So basically, project finance directions are applicable on which of the following institutions? So it is all commercial bank, including the small finance bank, but excluding the local area banks, payment bank, and regional rural banks. So this is wrong, because local area banks are not included. They are excluded from the project finance directions. All NBFCs, including housing finance companies, correct. All primary urban cooperative banks, all India financial institution, correct. So other statements are correct. So 2, 3 and 4, that is D is the answer. Okay. Chalo, coming to the next question. No individual lender shall have the exposure. So basically, in the project finance direction, where the loans are given, the heavy loans, big loans are given, so no individual lender. So basically, if the aggregate exposure of the lenders, if the total exposure of all the lenders is up to 1500 crores, then no individual lender shall have the exposure which is less than 10%. of the aggregate exposure. For projects where aggregate exposure is more than 1500 crores, the exposure floor, the minimum exposure for an individual lender shall be 5% or 150 crores, whichever is higher. Okay, so here the right answer is C. Now, for the project finance directions in under construction projects, this is the idea that if the loan is given up to 1500 crores by all the lenders combined, then no single lender shall have the exposure which is less than 10% of the aggregate exposure. Okay. Now, this is the availability of sufficient land or right of way. So for infrastructure projects under public private partnership model, there should be the land that should be available up to 50%. So this is the data that is also important. Now coming to the next question, try to read this question and try to answer this question. Okay. So under the Reserve Bank of India Project Finance Directions 2025, a project finance account classified as standard and that satisfies all relevant prudential conditions specified in the regulations where a resolution plan involving extension. So basically, if there is a stress that is coming in the project finance, in the project loan, because of the extension of the date of commencement of commercial operation or because of the extension of the timeline, there is the stress that is coming in the project finance, but it will still be considered standard if it is following which of the following conditions. Okay. So permitted extension of date is up to 3 years for infrastructure projects and up to 2 years for non-infrastructure projects. Correct. Cost overrun is maximum up to 10%. Wrong. So it is not 5%, it is 10%. Okay. Rise in project cost excluding any cost overrun in respect of the original project is 25%. That means if there is rise that is happening in project cost, excluding the cost overrun, if there is the scope or size of the project that has been expanded, in this case, the rise in project cost should be 25% or more. Okay, so both the statements are incorrect, and that's why the right answer is one only. That is D. Very good. I can see that you remember the nitty-gritties of the directions, so that is good to see. So infrastructure projects, for that deferment is provided up to 3 years. Non-infrastructure projects, the deferment is provided up to 2 years. Okay. Cost overrun can be maximum up to 10%, as well as the project cost should be 25% or more. Okay. Now coming to the next question, that is regarding your financial inclusion index. So try to answer this question. I've started to get the answer. Okay, everyone is saying A. What is the data? If it is wrong, then what should be the data? Very good, very good. It is 67. So financial inclusion index, it is released once in a year, so it is important. Okay, and this is a very important index of the Reserve Bank of India. So the value of financial inclusion index for March 2025 stands at 67 against the 64.2 in March 2024. So there is increase in financial inclusion index. Now the increase in financial inclusion index was because of two parameters, that is usage and quality. So this is correct. The usage has 45% of weightage in the index, excess has 35% of weightage in the index, and quality has 20% of the weightage in the index. Okay, so this is also correct. The Financial Inclusion Index was first published in August 2021 for March 2021. This is also correct. The Financial Inclusion Index does not have a base year, and it captures the value in a single value in between 0 and 100. 0 means complete financial exclusion, 100 means complete financial inclusion. So this is also correct. Only the first statement is wrong, and that's why A is the right answer here. The Financial Inclusion Index is 67 currently. So 67 is the Financial Inclusion Index. Okay, and the excess 35%, usage 45%, quality 20%. The improvement in financial inclusion index is because of usage and quality. Usage and quality. Okay. So this is the idea. Now try to answer this question. Recognizing the need to enhance customer protection and service delivery, the RBI has introduced amendment in the Reserve Bank of India Know Your Customer Directions 2016 Master Direction. Which of the following statement is or are correct in this regards? That you have to tell me. So for low risk individual customer, regulated entities shall continue to allow all transactions even if the KYC is due, provided KYC is updated within 1 year from the due date or by June 30, 2026.
Banks may obtain a self-declaration from customers in case of no change in KYC info or only address change through an authorized business correspondent. Yes. So if there is no change in KYC details or if there is only change in address, then business correspondent can take the self declaration from the customers. Banks must update the KYC in their system and inform the customer post updation. Final responsibility for the KYC update is with the bank only. So second and third statements are correct, and that's why the right answer here is E. Okay. Yes. So basically KYC amendments were released for KYC. It was said that if the update is required in the KYC before the due date, 3 intimation has to be given by the bank, at least 1 in the form of letter. After the due date has passed, if still the update has not happened in KYC, 3 intimations have to be given, or 3 letters have to 3 reminders have to be given, at least 1 in the form of letter. Okay. As well as updation or periodic updation of KYC is required for all the direct benefit transfer accounts, electronic benefit transfer accounts as well. Okay. Now try more than 100 questions. 100 plus questions we have. Around 100, like we have 105 questions basically. Okay. So RBI has recently, now around 65 questions are from your RBI notifications, and then around 40 questions are from your finance current affairs. Okay. So once the RBI notifications question finish, then it will be faster because then there are the questions from finance current affairs. Chalo. RBI has recently released RBI Investment in Alternative Investment Fund. It was said that regulated entity can invest in alternative investment fund. Okay. A single regulated entity should not invest more than 10%. Correct. Collective contribution by all regulated entities in the alternative investment fund should not be more than 20%. Correct. If regulated entity contributes more than 5% of the corpus of AIF and there is the downstream investment that is also happening, then 100% of provisions that has to be kept by the bank. So this is wrong. Sorry. It should be not 2%, it should be 5%, and the provision should be 100%. Okay. So first and second are correct and the third is incorrect. That's why the right answer here is A only. A is the right answer. So there are only 3-4 points that you have to keep in mind. Remember that no regulated entity shall individually invest more than 10% in the corpus of AIF. Collectively, all the regulated entities should not invest more than 20%. If there is 5%, like more than 5% of investment in the alternative investment fund corpus by a regulated entity and there is downstream investment, 100% of provisions are required. Okay. As well as if there is investment that is done by the regulated entity in the subordinated units, this kind of investment has to be deducted from the tier 1 and tier 2 capital because this is risky investment in the subordinated units. Now try to answer this question. Which of the following set of indicators is correctly captured under RBI's Services and Infrastructure Outlook Survey? Services, like even if you do not know about this Outlook survey, even if you do not know about this survey, at least think about it that it is about services and infrastructure Outlook survey. So it should not talk about deficit because deficit is of the government. Okay. Monetary policy stance, no. Consumer confidence, saving rate, urban employment doesn't matter here. Capital expenditure plan, stock market sentiment, no. Interest rates expectation, no. So only the B is right. Demand condition, financial condition, employment condition, price situation. Okay. So B is the right answer here. So even if you are not aware about the survey, you can take the intelligent guess here, logical guess here, elimination method you can use. Okay. So do not go with a blind guess. If you are doing a guess, do a logical, intelligent guess. Okay. So B is the right answer here. So basically this survey, it is based on qualitative responses on the set of indicators on demand condition, financial condition, employment condition, and price situation. The production depends upon demand condition, financial condition, the employment also, and price situation, as well as service and infrastructure sector. They cater to these areas. Now coming to the next question. So government of Arunachal Pradesh. Now we are starting with the finance current affairs basically. Okay. So finance current affairs, I have focused more on October plus September plus August. The July finance current affairs we can discuss in tomorrow's Maha Marathon session. That will be a collective Maha Marathon session for all the faculties. Okay. So in today's Maha Marathon session, I have focused on October plus September plus August plus July RBI notifications. and press releases, and October, September and August finance current affairs. Okay, and I will suggest you that do go through the monthly revision sessions also, because they were more detailed. If you want to have a good revision, this is the rapid fire for your practice, but if you want to have a detailed revision, then go through the monthly revision session. If you have already gone through the monthly revision session, then fine. Now try to answer this. SBI. Very good. State Bank of India. So government of Arunachal Pradesh has notified formation of 2 new districts. Accordingly, lead bank has been decided. State Bank of India. Lead bank basically has the responsibility to enhance the banking penetration or the banking facility and financial inclusion in the area. Okay, so new district is created. Assigning a lead bank ensures continuity in the banking operation, efficient delivery of the financial services, structured credit planning, and the financial inclusion and the financial expansion in the area. So the lead bank scheme, it was launched by the Reserve Bank of India in 1969. Following the recommendation of the Gadgil committee, the new districts that have been formed in Arunachal Pradesh will have the lead bank, that is State Bank of India. Okay, which country is participating as the partner country in the 6th Global FinTech Fest held in Mumbai? Very, very important. Okay, it is. As well as, so try to answer this question, that which country is participating as the partner country in the 6th Global FinTech Fest? So it is United Kingdom. It is United Kingdom. Next, so Ministry of Statistics and Program Implementation is participating in the Global FinTech. The theme is, remember the theme, it is empowering finance for a better world powered by AI. Organized by Payment Council of India, National Payment Corporation of India, and the FinTech Conversion Council, which was established in 2017, and later it was incorporated into a council. So it was established in 2017 as a FinTech company, FinTech committee, FinTech Convergence Council was later incorporated into a council under the aegis of Internet and Mobile Association of India. So remember that this Global FinTech Fest, it is organized by PCI, Payment Council of India, National Payment Corporation of India, and FinTech Conversion Council, which was established as a FinTech committee in 2017. Later, it was incorporated into a council under the aegis of Internet and Mobile Association of India. Okay, Payment Council of India was formed under the aegis of Internet and Mobile Association of India in year 2013. United Kingdom is participating as a partner bank, as a partner country, and the Global FinTech Fest, it started in 2020. Got it? Yes, very good. Now, moving forward, do tell me that Global FinTech Fest started in which year? It started in which year? Global FinTech Fest started in 2020. Okay. Unclaimed dividends, if left unclaimed for 7 years, must be transferred to which of the following fund? So unclaimed dividends, unclaimed shares, basically unclaimed dividends, if they are not claimed for 7 years or more, so the shares related to these dividends, they also become unclaimed shares. Unclaimed interest on the bonds, unclaimed matured bonds, if they are not claimed for 7 years or more, they are shifted to, yes, Investor Education and Protection Fund. They are sent to Investor Education and Protection Fund. So unclaimed dividend, unclaimed shares, unclaimed interest on the maturity bonds, unclaimed interest on the bonds, debentures, unclaimed maturity bonds, all of this, if they are not claimed for 7 years or more, they are transferred to Investor Education and Protection Fund. So it is D. Now, unclaimed insurance funds will remain with the insurer for up to -years, and if it is still left unclaimed, it will be transferred to the Senior Citizen Welfare Fund. The rightful beneficiaries can claim the funds even if it is transferred to Senior Citizen Welfare Fund for up to 25 years only. So here the answer is 10 years. Very good. So unclaimed insurance funds will remain with the insurer for up to 10 years. If it is left unclaimed, still it will be transferred to Senior Citizen Welfare Fund. The unclaimed deposits with the banks, if they are unclaimed for -years or more, they are transferred to Depository Education and Awareness Fund. Unclaimed dividend, unclaimed interest, unclaimed maturity bond, unclaimed shares, if they are unclaimed for -years or more, they are transferred to Investor Education and Protection Fund. Unclaimed insurance amount, if they are unclaimed for -years or more, they are transferred to Senior Citizen Welfare Fund. Okay, so unclaimed deposits 10 years or more, unclaimed dividend 7 years or more, unclaimed insurance 10 years or more. This is the idea. Moving forward, what is the name? The explanation has been given. Do read it once. Okay, at least give it a read. Next, what is the name of the SEBI-backed digital platform launched to help trace and reclaim unclaimed mutual fund investments? Is it Claim? Is it Find, Udaan, Mitra, Setu? What is the answer? The answer here is Mitra. Okay. Setu is for your KYC, is for your know your customer, eKYC process, basically digital KYC process. Mitra is for your trace and reclaim the unclaimed mutual fund investment. So you must have heard about Setu also, but Setu is for your eKYC, digital KYC. Mitra is for your trace and reclaiming unclaimed mutual fund investments. Okay, so service platform for investors to trace inactive and unclaimed mutual fund folios, that is Mitra mutual fund investment tracing and retrieval assistance. Now it is a SEBI backed digital platform developed jointly by mutual fund registrar and transfer agents, Computer Age Management Services and KFin Technologies Limited. So that, remember that MIT platform has been developed jointly by Computer Age Management Services Limited and KFin Technology Limited. This is the idea. Okay. Now the Unit Holder Protection Committee, this will now be responsible for reviewing inactive folios along with unclaimed dividends and redemptions, ensuring that proactive steps are taken so that the unclaimed mutual funds folios are being returned to the investors. Okay. An inactive folio shall be defined as mutual fund folio where no investor initiated transactions have taken place in the last 10 years, but unit balance is available. Okay, that means balance is available in the mutual fund, but there is no transaction that has happened in the last 10 years. Now, coming to the next question. The co-lending partnership between Bank of Baroda and IIFL Finance focuses on providing which type of loans targeting unbanked populations in semi-urban and rural areas of India. So basically, co-lending partnership has happened between Bank of Baroda and IIFL Finance. The originating regulated entity is IIFL Finance. Now they have come together for particularly which type of loans? For particularly gold loans or loans against the collateral of gold. So this is the idea that Bank of Baroda and IIFL have come together for providing the gold loans in the unbanked areas, and the originating regulated entity is IIFL Finance. From November 15, what is the revised penalty for non-FASTag users paying toll through the UPI? So basically, if you use the FASTag, you have to pay 100 rupees, let's say. If you don't use the FASTag, you use the cash or UPI, you have to pay double. Now it has been said that if you use the UPI, you do not have the FASTag, and you use the UPI, you have to pay 1.25 times rather than 2 times, rather than double, you only have to pay 1.25 times of the toll fee using the UPI. So the answer here is D. Now coming to the next one. At which retail chain in Doha, Qatar was India's UPI launched recently? This is from your October. Yes. Is it Carrefour, Lulu Hypermarket, Walmart, AI, Mira or Spar? It is Lulu Hypermarket. Okay. So answer here is B. So Union Minister of Commerce and Industry launched India's UPI at Lulu Hypermarket in Doha, Qatar. UPI has officially been launched in Qatar. UPI has gone live in Qatar. It was announced in September 2025, enabling Indian travelers to make cashless payment at Qatar duty-free stores at Hamad Airport. Qatar Duty Free is the first merchant in Qatar to accept QR code-based UPI transactions, facilitated through a collaboration between Qatar National Bank, NPCI International Payment Limited, and Net Stars of Japan. Okay, so basically, Qatar Duty Free area in the Hamad Airport or Qatar Duty Free stores at Hamad Airport, they are accepting the QR code based UPI transactions facilitated through a collaboration between the NPCI International Payment Limited, Qatar National Bank, and Net Stars of Japan. This is the basic idea. Coming to the next question, try to answer this. What does the Composite Corporate Agent License granted to FATAK Secure by IRDI allow the company to do? So there is a Composite Corporate Agent License that has been given to FATAK Secure. So what this Composite Corporate Agent License will help FATAK Secure to do? Underwrite insurance policies? No. Operate as a reinsurance provider? No. Offer banking or loan services? Regulate insurance companies? No. Sell multiple categories of insurance products. Okay. So Composite Corporate Agent License will help the FATAK Secure to sell multiple categories of insurance products on behalf of an insurance company. So this is the idea. E is the answer. Okay. Next is the dash under the Ministry of Corporate Affairs launched phase 2 of its financial literacy initiative Niveshak Didi, aimed at empowering women through financial education. So Phase 2 of Niveshak Didi has been initiated. Niveshak means investor, Didi means women. So for women, participation in the investment domain, there is the Niveshak Didi phase 2 that has been launched. This has been launched by IEPFA, that is Investor Education and Protection Fund Authority, in partnership with IPB. So India Post Payment Bank. Okay. So here the Investor Education and Protection Fund Authority, Investor Education and Protection Fund Authority has launched the phase 2 of the Niveshak Didi. Okay, and this has been launched in partnership with India Post Payment Bank to use the vast network of India Post Payment Bank in the rural areas. Okay. Now, moving forward, so you can read about India Post Payment Bank that has recently celebrated its 8th Foundation Day, and there were the new initiatives that were launched: DG Smart Digital Saving Account, Premium Arogya Saving Account for banking and healthcare facilities. Okay. Now, the India Post Payment Bank has a slogan that is, every customer is important, every transaction is significant, every deposit is valuable. So this is the idea. Now, Investor Education and Protection Fund Authority has proposed simplified documentation for low value claims up to dash in physical securities. So Investor Education and Protection Fund Authority has proposed that there should be simplified documentation for low value claims for the physical securities, low value claims for the digital securities, low value claims for the dividend. If there are low value claims in these areas, there should be simplified documentation. For low value claims up to dash amount in physical securities, up to 5 lakh in physical securities. Low value claims is up to what for the digital securities? Up to 15 lakh for the digital securities. Low value claim for dividend is 10,000 rupees. Okay. So this is the idea, that here the low value claims up to 5 lakh in physical securities, for that there is simplified documentation that is proposed. So IPFA, Investor Education and Protection Fund Authority, has proposed simplified documentation for low value claims covering up to 5 lakh in physical securities, 15 lakh in digital securities and 10,000 in dividend claims. Try to answer this question. Which of the following regulatory body is responsible for monitoring and enforcing compliance of auditors of large public interest entities in India, including listed companies and certain unlisted companies? So which is the regulatory body that is responsible for monitoring and enforcing compliance of auditors? Try to answer this. Is it Financial Stability and Development Council, Institute of Chartered Accountants of India, Ministry of Corporate Affairs, National Financing Reporting Authority, or SEBI? It is National Financing Reporting Authority. It has recently, why I have asked this question, because it has recently, the NFRA, that is National Financing Reporting Authority, it has recently launched a nationwide outreach initiative titled Creating a Better Financing Reporting World to improve the audit quality and promote sustainable practices. Okay, with this outreach initiative, it has also rolled out the first ever audit firm survey 2025 to address the audit quality challenges. Now this NFRA, it comes under the Ministry of Corporate Affairs. Now try to answer the next question, that is the Department of Financial Services under the Ministry of Finance organized Public Sector Bank Manthan 2025. Okay, so Department of Financial Services has organized the Public Sector Bank Manthan 2025. India is looking to scale up at least 2 public sector banks to become the top 20 to become one of the top 20 banks in the world by 2030, 2035, 2040 or 2047. It is 2047. Okay. So Department of Financial Services under the Ministry of Finance organized Public Sector Bank Manthan 2025. The organizing body is Department of Financial Services. The objective is to align the public sector bank with the vision of Viksit Bharat 2047. India is looking to scale up at least 2 public sector banks to become one of the top 20 banks in the world by 2047. We have one bank that is in top 50. Which bank is it? State Bank of India, that has the ranking of 43. We have one private sector bank in the top 100. Which is that bank? SDFC Bank. Very good. Very good, Denab. Correct. So, State Bank of India ranks 43rd. SDFC Bank ranks 73rd. Okay. So this is the idea. The last such Manthan was held in 2022. So Public Sector Bank Manthan 2025 has been organized with the vision of Viksit Bharat 2047 to align the public sector banks with the vision of Viksit Bharat 2047. And India is looking up to scale at least 2 public sector banks to become one of the top 20 banks in the world by 2047. Okay. This is some additional information that you can go through. Which bank has contributed the highest profit in the public sector bank of 40%? Which public sector bank has contributed in the highest or has contributed highest profit in the public sector bank? It is State Bank of India, Union Bank of Baroda, Canara Bank, Punjab National Bank, it is State Bank of India. If we see in terms of growth, which bank has got the highest growth? Which bank has got the highest growth in profits in the recent period? Is it State Bank of India, Punjab National Bank? Is it Bank of Baroda, Canara Bank or such? It is Punjab National Bank. Punjab National Bank has got the highest growth. Punjab National Bank has got the highest growth, percentage growth in the net profit at 102%. Okay, so remember this. Now coming to the next question, the UPI UPU integration was unveiled at the 28th Universal Postal Congress in Dash. So UPI Unified Payment Interface has been integrated with the UPU Universal Postal Union interconnection platform. So UPI has been connected with the interconnection platform of the Union platform of the Universal Postal Union. Okay, so this integration was unveiled in Dubai. Basically, this integration was unveiled in Dubai. So here the answer is D. So at the 28th Universal Postal Congress in Dubai, India unveiled the UPI UPU integration. So the UPI Unified Payment Interface has been integrated with the UPUs with the Universal Postal Union's interconnection platform. The initiative was jointly developed by the Department of Post, NPCI International Payment Limited and the UPU, that is the Universal Postal Union. That is the idea. Okay, as well as India has also announced its candidature for the UPU Council of Administration and Postal Operations Council, both headquartered in Bern, Switzerland. So this is the basic idea. Now coming to the next question, Sehmati marked the 4th Dash Foundation Day, the Microfinance Institutions Foundation Day, Peer-to-Peer Lending Platform Foundation Day, TREDS, Bharat Connect or Account Aggregator Foundation Day. So Sehmati has marked the 4th Dash Foundation Day, celebrating the progress since the RBI Master Action in 2016 and the framework's official launch in 2021. So Sehmati marked the 4th Account Aggregator Foundation Day. Account aggregators, they are the ones that transfer the information of the customer with the consent of the customer from the financial information providers to financial information users. So they help in the transfer of the financial information from the providers to the users. Okay, so Sehmati, that is the Industry Alliance for Account Aggregators, marked the 4th Account Aggregator Foundation Day. Try to answer this question. What is the approved size of the initial public offering that Grow plans to launch after receiving SEBI's nod in 2025? So here the answer is $1 billion. So what is the approved size of IPO? It is $1 billion. Okay, so Grow, founded in 2016, headquartered in Bangalore, has received SEBI approval to launch a $1 billion initial public offering, expected to be largest primary market fundraise. Now the Grow, it has re-domiciled itself from US to India, so that in India it can do the listing. Okay, JP Morgan Chase and Kotak Mahindra Bank, they have been appointed as the lead managers, and the company is a subsidiary. The Grow is a subsidiary of Billion Brains Garage Ventures Private Limited. Okay, now coming to the next question, this is regarding your index options. Okay, so after discussions and deliberations in the SMAC, SEBI has decided to introduce an intraday monitoring framework at entity level for the index options or the index future equivalent. Okay, options are also known as future equivalent for the index. Which of the following statement is or are correct in this regards? Now this direction was only released for the options, that is also called future equivalent. Okay, so intraday net position limit for each entity shall be 5,000 crores, while the end of the day limit was decided at 1,500 crores. Okay, intraday gross position limit for each entity shall be 10,000 crores. Correct. The intraday limit shall continue to be monitored by the stock exchanges through a minimum of 4 random snapshots, not 3. It is 4 random snapshots. So first and second are correct, third is incorrect, and that's why the right answer here is A. The right answer here is A only. So this we have discussed. The net position limit is 5,000 crores. The gross position limit is 10,000 crore for the intraday limits. Okay. Now coming to the next one. So there are minimum of 4 random snapshot, out of which 1 random snapshot should be in between 245 to 330 hours. That is during the closing times. Now, SEBI board approved amendment to SEBI Real Estate Investment Trust Regulations 2014 and InvIT Regulations 2014. Which of the following statement is or are correct in regard to the amendment done by SEBI for the InvIT and REIT that you have to discuss? Okay, the related parties of sponsor, investment manager, project manager, they shall not be considered as public unless these are qualified institutional buyers. So this is correct. So they shall not be considered as public unless these are QIPs. Okay, unless these are QIPs. Now, minimum allotment lot in primary market for privately placed InvITs. The minimum allotment lot in the primary market for privately placed InvITs has been reduced to, so basically in the primary market, the privately placed InvIT, the InvIT that is privately placed sold to only a few selected investors. So in the primary market, the lot size was 1 crore or 25 crores, while in the secondary market, the lot size was 25 lakh. Now in the primary market, the lot size has been reduced from 1 crore or 25 crore to only 25 lakhs, so that it becomes aligned with the 25 lakhs of a secondary market. So it is not 50 lakhs, it is 25 lakhs. So this is wrong. Okay, the negative net distributable cash flows generated by the holdco on its own can be adjusted against the cash received from the special purpose vehicle. So this is correct. Okay, so first and third are correct, and the question was about correct only. So answer is C. Chalo. So these are the guidelines that you can read once. Here basically it has been said that if there is the privately placed InvIT in the primary market, the minimum allotment lot was 1 crore or 25 crores. Now the lot size has been reduced to 25 lakhs so that it is aligned with the secondary market lot size. The insurance surety bond issued for National Highway Authority of India contracts have crossed 10,000 crores. Okay, so insurance surety bonds that is provided by the insurance companies, so it has crossed the 10,000 crore milestone. That is the idea. Okay. Now the SEBI reclassified REITs from hybrid securities to equity securities for mutual fund investment, as well as mutual funds. If you are exiting the mutual fund before the maximum exit load or before the maximum exit fee that can be taken was how much percentage, and now it has been reduced to what percentage? So yes, correct. Before it was 5%, maximum exit fee was 5%, which now has been reduced to 3%. So here the right answer is D. Next is, so you can read the details. We have already discussed this in the monthly revision session as well as in various sessions we have discussed this. Okay, but do give it a read. The microfinance institution disbursements has declined 24% year on year. That means microfinance institutions, they are providing less of microfinance loans. Their disbursement has reduced by 24%. Okay. Next is the SEBI board approved the introduction of single window automatic and generalized access for trusted foreign investors, framework for foreign portfolio investors and foreign venture capital investors. Okay, so basically SEBI board has approved the introduction of Swagat FI, that is for trusted foreign investors. There is easier access that is provided to the Indian financial market, So to the trusted foreign investors, there is easier access that is provided to the Indian financial market. Now Swagat FI framework has been launched for FPIs for the foreign portfolio investors and foreign venture capital investors. Which of the following statements is or are correct in regards to Swagat FI? Exemption has been provided from foreign venture capital investor regulation requiring at least 55% of investment in eligible unlisted assets. It is 66%, not 55%. Okay, this is 66%. So exemption from the exemptions has been provided from 66% investment in eligible unlisted assets. So this is the requirement that is not available or that is not there. Okay, for the trusted foreign investors. Registration, validity, KYC review and fee payment of $25,000 to be applicable for a 10-year block instead of standard 3-year block. That is correct. Exemption from 50%. So exemption is provided from 50% aggregate contribution from the individuals in the FPIs. So this is wrong because it is 50%, not 40%. So exemption is provided from 66% of investment in the unlisted assets for the foreign venture capital investors, as well as exemption is provided from 50% of the limit of investment in foreign portfolio investors by these individuals. Okay, so first and third statements are wrong and only the second was correct. That's why the answer here is E. Very good, everyone. So this is very, very important. What are the entities that are under the Swagat FI that are called or that are considered trusted foreign investors. So these are the entities that are trusted foreign investors, that are considered trusted foreign investors, okay? As well as they have been provided certain relaxations. So these are the relaxations that have been provided. The registration validity, instead of 3-year block, the registration validity has been provided for 10-year block. Now try to answer this question. Basically, in October 2025, SEBI approved significant reforms aimed at simplifying the regulation for initial public offering and enhancing the market participant. Which of the following is not one of the changes introduced by SEBI to encourage more institutional participation in the IPOs? Life insurance companies and sovereign wealth funds have been added to the anchor investor pool. Life insurance companies and pension funds, they have been added to the anchor investor pool. So first statement is wrong. Anchor investor reservation, so that in the initial public offering, before the shares are offered to the general public in the general market, before the IPO is opened for the general investors, the anchor investors, they can invest in the shares, and a percentage of IPO shares are saved or reserved for the anchor investor. Before it was maximum up to 1/3, now it is 40%. So anchor investor reservation has been increased from 1/3 to 40%, correct. The minimum public shareholding for companies with market capitalization above 1 lakh crore has been relaxed. So minimum public shareholding basically says that once a company is listed, it has to provide 25% of the shares to the general public, okay? So there should be minimum public shareholding of 25%. That can happen in a phased manner, okay? So minimum public shareholding for companies with market capitalization with market valuation above 1 lakh crore has been relaxed, allowing a 5-year timeline. A 5-year timeline is allowed or is provided to reach 25% of the minimum public shareholding if the public shareholding at listing is above 15%. So during the listing or during the IPO, when the company was getting listed, if above 15% of the shares have been provided, then 5 more years or 5-year timeline will be given to reach 25% of minimum public shareholding, okay? So this is wrong. First is also wrong. So here the answer is, which of the following is not one of the changes? So 1 and 3 are not, and that's why the answer here is C, okay? Chalo. So basically, it has been said that to reach minimum public shareholding, if during the initial listing below 15% of the listing has happened, of the shares have been sold, so must reach 15% in 5 years and 25% in 10 years. If above 15% or above 15% was listed, then 25% has to be reached within 5 years, okay? Now same rules were applied to 5 lakh crore and above market capitalization. Now the same rule applies to the market capitalization, to the companies that have market capitalization above 1 lakh crore, okay? So this is the idea. So this is for minimum public shareholding. Now while the listing, how much of the listing amount should be there? How much of the shares should be listed? So minimum shares that have to be listed by a big company. So minimum public offer or minimum listing raised to 6,250 crore or 2.8%. Okay, for the companies that have the market capitalization of 1 to 5 lakh crores. For companies that have more than 5 lakh crore of market capitalization, they need to have the minimum public offer of 2.5% during the listing, during the initial phase. Okay, and the minimum public shareholding has to be achieved within this timeline. Chalo, coming to the next point. Try to answer this. SEBI recently made changes to the eligibility norms for non-governmental organization wishing to raise funds through social stock exchange. So through the social stock exchange, the not-for-profit organizations as well as for-profit social enterprises, they can raise the funds from the investors through the social stock exchange. Now there are some norms that have been changed. First of all, for listed securities, the annual impact report has to be submitted. And the annual impact report must cover at least 67% of program expenditure of the previous financial year. So the answer here is D. The answer here is D, that is 67%. So basically there are certain norms that have been changed so that you can read. We have discussed this in the monthly revision session also, that there are certain categories that have been added for the social stock exchange. So these categories will be considered not-for-profit organizations. Okay, a new reporting requirement, at least for listed securities in the social stock exchange, the annual impact report must cover at least 67% of program expenditure. Okay, next is that social impact assessment provision. So annual impact report that has to be submitted, or disclosure timeline. So non-financial or governance disclosure should happen within 60 days of financial year end. Financial disclosures should happen by October 31st or income tax return due date. Okay, and the annual impact report that has to be assessed by social impact assessors. Social impact assessment organization is there that should have the empaneled, that should be empaneled with designated self-regulatory organization. At least 2 full-time social impact assessors should be there that should have the minimum 3 years of experience. The social impact assessment organization should have a 3-year experience. If it does not have 3-year experience, then the individual assessors must sign the annual impact report. Okay, so this is the idea. As well as the registered not-for-profit organization that have raised funds from the SSC, they have to, so registered not-for-profit organization, they have to raise funds through the SSC within how many years? Within 2 years. So registered social enterprises must raise funds, or registered NPOs or registered social enterprises, they must raise funds through SSC within 2 years of registration. Okay, now try to answer this question. Correct. In 2025, SEBI amended the custodian regulations to strengthen risk management system. So custodians, they are the entities that help in management or custody or safeguarding the multiple securities owned by the mutual funds, or under the mutual funds, under the foreign portfolio investors, under the big investors basically. So there are multiple securities so that are safeguarded by the custodians. The minimum net worth requirement for custodians has been increased to 75 crores. It has been increased from what? So net worth requirement has been increased to 75 crores from very good, from 50 crores. Okay, from 50 crores. So in 2025, SEBI amended the custodian regulations to strengthen the risk management system. The minimum net worth requirement for the custodians has been increased to 75 crores from 50 crores. So this is the answer. Okay, 75 crores. Next, what is the maximum voucher value that can be issued using Bank of Baroda's e-rupee P2P, person to person or peer to peer digital gifting feature on the Bank of Baroda e-pay UPI app? So try to answer this. So what is the maximum voucher value? The minimum voucher value is rupee 1. The maximum voucher value is rupees 10,000. So whenever the corporate private entity is giving the voucher value is maximum up to 10,000. If the government is giving the voucher, then the maximum value can be, if the government is giving the voucher, then the maximum value can be how much? If the government is giving the voucher, it can be up to 1 lakh. Very good everyone. So what is the maximum voucher? What is the maximum voucher value that can be issued using Bank of Baroda's e-rupee peer-to-peer digital gifting? So 10,000. Okay, government can give them voucher with a maximum value of 1 lakh rupees. Okay, so this is the idea. So Bank of Baroda has launched e-rupee person-to-person digital gifting on its Bank of Baroda e-pay UPI app, becoming the first bank in India to offer this feature. Okay, now vouchers can range from 1 rupee to 10,000 rupees. They are interoperable across all UPI platforms. The government can provide the voucher up to the maximum value of 1 lakh rupees. Okay, the feature, the customers can gift purpose-specific prepaid vouchers. So this is the idea. E-rupee vouchers can be given. If you want to gift your brother shoes, so you can give the e-rupee voucher up to, let's say, 5,000 rupees you are giving, so that he spends the money in shoes only and such. Now, the banking system liquidity deficit was there. So in the banking system, there was liquidity deficit. The liquidity was in deficit. The money supply was less by 87,183 crore. So a Reserve Bank of India conducted overnight variable rate repo, in which at the variable rate, at the bid rate, the repo operation happened. The loans were given by the Reserve Bank of India to the banks so that the banks can have the sufficient money and the sufficient money supply. So banking system had the liquidity deficit. They had the less money supply, so the RBI provided the loans, or RBI provided the money to the banks through the variable rate repo auction. Okay, coming to the next question. So DBS Bank India received RBI approval to act as an agency bank for the collection of which of the following taxes? So DBS Bank India, it has received the RBI approval to act as an agency bank and to collect this type of tax on behalf of the government. So it is goods and service tax. Okay, Very good, everyone. So basically, the DBS Bank India received RBI approval to act as an agency bank for goods and service tax collection on behalf of the government. GST payments can now be made through DBS Ideal, that is the bank's enterprise digital banking platform. The DBS has ranked Asia's safest bank, okay, as well as it was named best digital bank for small and medium enterprises in India. DBS Bank India also won multiple awards from CRISIL Coalition Greenwich, including best bank for corporate banking, and multiple awards it has won. Next is, which company was granted third party application provider approval by the NPCI to offer UPI services in partnership with banks? Like Google Pay is there, Phone Pay is there, that provide the UPI services. Now, which entity will also be able to provide the UPI facility? It is Viona Fintech. Very good. So Viona Fintech is the company that was granted third party application provider approval so that it can provide the UPI facility. The NPCI has requested the Reserve Bank of India to allow the UPI based cash withdrawal through the business correspondent, that is the agents of the banks, up to what limit? So the NPCI has requested the Reserve Bank of India to approve the UPI based cash withdrawals through the business correspondent up to the limit of 10,000, up to the limit of 10,000. Okay, so this is the request that has been raised by the NPCI. So NPCI has sought approval from RBI to enable UPI based cash withdrawal through the business correspondent up to 10,000 rupees, and UPI cash withdrawals can happen through select ATMs, 1,000 per transaction in urban areas and 2,000 per transaction in rural areas. UPI accounts for 85% of India's digital payments and nearly 50% of global real-time digital transactions. Now, which of the following is the world's first and largest unified digital insurance marketplace launched by the IRDI? So there is Bima Trinity, Bima Sugam, Bima Vistar, and Bima Vahak. Okay, in this Bima Sugam, this has been recently launched by the IRDI. This is world's first and largest unified digital insurance marketplace where you can buy, this is the marketplace for the insurance where you can buy the insurance products, the motor insurance, or you want to buy the fire insurance, you want to buy travel insurance, life insurance, general insurance, whichever kind of insurance you want to buy. There are multiple companies that you can select from and you can buy the insurance. Bima Sugam is the platform. Okay, so this is the idea. So Bima Sugam is for your, this is the first and largest unified digital insurance marketplace. Bima Vistar, it is for the low income households so that they can get at the cheap rate. They can get a composite insurance product, a single insurance product, a composite insurance product they can get at a cheap rate. So Bima Vistar, it is a composite insurance product that is provided to the low income household so that through this single insurance product, the low income households can be protected to some extent, okay, through the insurance product. Bima Vahak, this is women led rural outreach to reach to the far off areas and to spread the awareness about the insurance products and to sell the insurance products So women led rural outreach force, or this is the agent force, that is Bima Vahak. Next is, which Indian state led in overall UPI usage according to the August 2025 data? So according to the August 2025 data, the SBI, State Bank of India, is the largest remitter bank, that is remitting the payments, or that is sending the payments. Yes Bank is the largest beneficiary bank that is receiving the benefit, okay, as well as the largest state that is having the highest overall UPI usage. It is Maharashtra. Yes, very, very good. So here the data has been given, the 85% of India's UPI powers 85% of India's digital payments and nearly 50% globally. This is the data that is again and again in news, July, August, September, in all the months. So this is important, as well as the rest of the data you can read. SBI has emerged as the top UPI sender of the money. Yes Bank has been seen as the top UPI beneficiary. Maharashtra has led in overall state-wise UPI usage. Uttar Pradesh stood out as only northeastern state in the top 5 UPI users. That is the idea. Coming to the next question, India Post Payment Bank nationwide Aadhaar-based face authentication system aligns with which of the following vision of the bank? So basically, the India Post Payment Bank has started with the face authentication system through your face scan, through your face, like instead of taking your thumbprint or iris scan, the face scan can also happen, face authentication can also happen. But what is the theme or vision of the India Post Payment Bank? It is आपका बैंक आपके द्वार. So such kind of question can come because this theme or this vision was directly in the PIB in August. So you can understand that this is important. Okay. So IPPB is a pioneer, is a bank that is pioneer in accessible banking services. It has announced the nationwide rollout of Aadhaar-based face authentication facility for customers, especially to help the elderly whose fingerprint is not working now or iris scan is not clear. So as well as for differently abled, this kind of facility has been provided that will help especially the elderly and the differently abled. And the vision of the bank is Aapka Bank Aapke Dwar. Try to answer this question now. NABARD and RBI have taken several initiatives to promote rural financial literacy and strengthen the borrower protection in microfinance sector. Which of the following statements is or are correct in regards to this initiative? So RBI simplified the definition of microfinance loans to include all collateral-free loans given to households with annual income up to 3 lakh rupees. So this is wrong. The SROs for microfinance sector, Sadhan and Microfinance Industry Network, yes, these are the 2 SROs for microfinance sector. Center for Financial Literacy project was initiated by RBI in 2017, not 2021. So first is incorrect, third is incorrect. The answer here is correct, that is only 2. E is the answer, okay. So now coming to the next question, which organization has launched the new Aadhaar-based authentication framework for cooperative banks aiming to enhance digital banking and financial inclusion in India? So which organization has launched the new Aadhaar-based authentication framework for cooperative banks? So, and this has been launched as this is the International Year for Cooperatives. 2025 is the International Year for Cooperatives. So it is UIDI. Very good. So basically, to mark the International Year of Cooperatives, that is 2025, the UIDI, that is the Unique Identification Authority of India, has rolled out a new framework to onboard cooperative banks and enable them to deliver Aadhaar-based authentication services. It has been said that only the state cooperative banks will register with the UIDI as authentication user agencies or eKYC user agencies. The district cooperative banks, district central cooperative banks, they can use the Aadhaar services or IT infrastructure of their respective state cooperative banks, because under the state cooperative banks there are the district cooperative banks. Now coming to the next question, the Department of Post has completed the rollout of its new in-house developed postal and logistics solution, Advanced Postal Technology. This platform has been designed and developed indigenously by Center for Excellence in Postal Technology. Okay, so under the Department of Post, there is the Advanced Postal Technology that has been launched. This is the IT Modernization Project 2.0 that has been designed and developed by Center for Excellence in Postal Technology. Now, the application is hosted on the Government of India's Meghraj 2.0 cloud platform and supported by BSNL's nationwide connectivity. Next is which public sector bank? Which public sector bank has become the first public sector bank in India to migrate its corporate website to the secure.bank.in domain in line with RBI's April 2025 directive? So think about it, that which entity has become the first public sector bank to migrate to the corporate website, that is .bank.in. Okay, it is Punjab National Bank. Now, which is the sole registrar? Which entity is the sole registrar for this domain? Okay, which entity can provide this domain to the banks? So all the banks, their official website should have this domain. Which entity can provide this domain? It is IDRBT. Very good, very good. Good to see that. So IDRBT, Institute for Development and Research in Banking Technology, this is acting as the exclusive sole registrar for the .bank.in domain. So if a bank wants to get the domain for its official website, it has to take it from the IDRBT. Okay, so that is the idea. Coming to the next question. So Employees Provident Fund Organization has raised the ex gratia benefit, the benefit available under its death relief fund for employees of the central board. So the Employees Provident Fund Organization has raised the ex gratia benefit. This is not a legal norm, but this is a moral kind of benefit that is provided, or this is the moral obligation according to which EPFO is providing this benefit available under its death relief fund for employees of the central board with effect from April 1, 2005. The amount payable to the nominees or the legal heirs in the event of an employee's death while in service will increase from 8.8 lakh to 15 lakh. And every year there will be increase of how much percentage seeing the inflation. Every year there will be increase of what percentage because of the inflation. There is, yes, very good, 5%. So ex gratia amount will automatically increase by 5% annually. Okay, so basically the ex gratia amount under the death relief fund has been increased from 8.8 lakh to 15 lakh for the central board employees of the EPFO. This amount will be provided to the nominee or legal heirs in case of death during service. The ex gratia amount will automatically increase by 5% annually starting from April 1, 2026, that is from next year, to adjust for inflation and rising cost. That is the idea. Next is, which global investment bank has been appointed by the government of India as the transaction advisor to divest to reduce its stake in 4 public sector banks to help them comply with SEBI's minimum public shareholding norms, that is 25% should be minimum public shareholding. That means government has to reduce its stake in these 4 banks. For that, which entity has been appointed as the transaction advisor? It is Goldman Sachs. Okay, so basically Goldman, this is the entity that has been selected as the transaction advisor to provide the advice for divesting the government stake in these 4 banks: Indian Overseas Bank, Central Bank of India, UCO Bank, and Punjab and Sindh Bank. In these banks, the government is having over 90% of the shareholding, which has to be reduced to 75%. So that 25% of the shareholding can be with the public, can be the minimum public shareholding. Okay, and basically the government has been provided the relaxation that the government can achieve. So state run listed entities or government listed entities have an exemption from 25% minimum public shareholding norm till August 1, 2026. Till August 1, 2026. Okay. Now coming to the next question, that is regarding your fraud risk intelligence system. So try to read these statements and try to answer the question. So which of the following statements is true regarding the fraud risk intelligence system developed by the Department of Telecommunications? So FRI is a standalone project under the Ministry of Finance to monitor telecom spectrum? No, it is under the Department of Telecommunications. Okay, FRI is accessible only to law enforcement agency? It is no. The fraud risk intelligence or financial fraud risk intelligence system, it is available to the banks, NBFCs, system participants and such. FRI is part of the Digital Intelligence Unit project of Department of Telecommunication developed to classify mobile numbers in medium risk, high risk and very high risk category. And these data will be provided to all the financial participants and such with access provided through the digital intelligence platform. So this is correct. FRI was developed exclusively for purpose of verifying KYC? No. It was to segregate the mobile numbers into medium risk, high risk and very high risk category. Okay. FRI is one-time initiative with a project outlay of 50 crore? No. So answer here is C. So here you can read that the financial fraud risk indicator, this was launched in May 2025 by Department of Telecommunication Digital Intelligence Unit. This is a risk metric that is dividing the telephone numbers or mobile numbers into medium risk, high risk and very high risk category. Okay, so this is the idea. So this is developed by Digital Intelligence Unit under the Department of Telecommunication, and this is the access to the financial fraud risk indicator. This is available to all the stakeholders, banks, NBFCs, UPI service providers via the digital intelligence platform. This is the idea. Chalo, this is the additional information that you can read, that SEBI has scrapped or removed the transaction charges paid to mutual fund agents with immediate effect. So basically the SEBI is saying that the mutual fund agents or distributors, they get the money from the asset management companies or mutual funds. Okay, so based on the feedback received from the industry and considering that distributors as an agent of the asset management companies, so distributors or agents, as they are the agents under the asset management companies that are managing the mutual funds, so they are entitled, these distributors or agents, they are entitled to the remuneration from the asset management companies. Okay, so there should be no additional charges that the SEBI should be mandating. So as per SEBI earlier directions, the distributors or agents, they were eligible for transaction charges for getting some fee if they brought in a minimum subscription of 10,000 rupees. But now these kind of transaction charges have been removed by SEBI because this kind of mandate is not required, as the asset management companies have to pay to the agents or distributors anyway, because the distributors or agents are connected with the asset management company. Okay, now another article was regarding reducing the non-performing asset. So it was said that there were different steps that have been taken to reduce the non-performing asset. For the public sector bank, insolvency and bankruptcy code has been introduced. Central repository of information on large credits, this was introduced, established in 2014 and such. Now coming to the next, so it was also said that all the customer communications should be provided by RBI in 3 languages: Hindi, English and regional language, as well as CP Grams. You can remember the full form of CP Grams. This is an online platform, a one-stop solution basically, where you can raise your grievances against the public authorities. Now try to answer this question. What is the name of the 100-day national campaign launched by Investor Education and Protection Fund Authority under the Ministry of Corporate Affairs, which is aimed at creating awareness about unclaimed dividends and guiding shareholders on KYC and nomination updates? So here, yes, Saksham Niveshak. Saksham Niveshak is the name of the 100-day national campaign launched by the IPFA. Okay. Now you have to tell me here that NARCL, when was it established? When was it established? Okay, NARCL, this is National Asset Reconstruction Company that buy the bad loans from the banks, okay, or from the financial institutions. NARCL can buy the bad loans, NPAs. So when was it established? That you have to tell me, because this is a static information that you need to know. Now, IPFA under the Ministry of Corporate Affairs has launched a 100-day campaign titled Saksham Niveshak, and this was to create awareness about unclaimed dividends held by companies and guiding them through the process of guiding the investors and creating awareness among the investors about the unclaimed dividends and guiding the investors so that they can update their KYC and they can claim back their money. Okay, so Saksham Niveshak it is. Coming to the next one, that is VCF, that is Venture Capital Fund Settlement Scheme 2025. This provides a settlement opportunity to the venture capital funds who have completed the migration to the SEBI Alternative Investment Fund Regulations 2012 and they have unliquidated investment that they have not liquidated within the set timeline. Okay, so venture capital funds with at least one scheme whose tenure has expired but they have not liquidated the investment, they have not returned the full amount to the investors, and they have completed the migration to the alternative investment fund scheme. So yes, they can access this settlement scheme. An entity desirous of making an application, they have to submit an application with the application non-refundable application fee of 25,000 with 18% GST. So this is wrong. Base amount for settlement for delay up to 1 year in winding up the scheme. So if delay has happened by 1 year in winding up the scheme in liquidating the assets, so that is 1 lakh rupees should be the penalty for delay up to 1 year. If the delay is for subsequent years, also for 2 years, 3 years, for the second and third years, for the subsequent years, additional amount of 50,000 has to be taken for per year. Okay, so this is the penalty. So this is right. So first and third are right, second is incorrect, and that's why the answer here is 2 only. So this was the venture capital fund settlement scheme that we have discussed again and again. There is the penalty that is taken if the venture capital fund has not liquidated the investment, has not finished the venture capital fund scheme within the timeline. Then the venture capital fund, they have to pay the penalty and they have to settle the amount. Okay, so this is the idea. Now coming to the next question, the Bombay Stock Exchange through its wholly owned subsidiary Asia Index Private Limited has unveiled a new sectoral benchmark, that is the Bombay Stock Exchange Insurance Index, offering investors and fund managers a focused tool to track the performance of India's listed insurance companies. Okay, so Bombay Stock Exchange, its wholly owned subsidiary Asia Index Private Limited has launched Bombay Insurance Index. Now the index is launched with the base value of 1000, correct. The index is backdated to start from 18 June 2018, correct. The index will take the constituents from BSC 500 index, or which index, okay, or BSC 1000 index or BSC 15 index. So basically the index will take the constituents, the BSC insurance index will take the constituents from BSC
1000 index, okay, from BSE 1000 index. The index is said to be reconstituted semi-annually in June and December. So this is wrong. First and second are correct. So here the right answer is A, first and second, okay. Yes. So basically BSE through its wholly owned subsidiary has established the BSE insurance index that will draw its constituents from BSE 1000 index, and the highest weight is capped at 25%. The highest weight in the BSE insurance index is currently of the STFC life insurance company, and this is the additional detail that you can read. Now, going to the third question or 103rd question, SEBI introduced amendments in 2024 to bring small and medium REITs under regulation with assets value. So it was said that the small and medium real estate investment trust that collect the money or that pool in the money from the investors and invest this money in the real estate projects. So small and medium real estate investment trust, they can have the asset values ranging from 50 crore to 500 crore. Recently, which company became the first public listed company in India to receive SEBI's registration certificate for launching an small and medium real estate investment trust? So it is Aurum PropTech. So it is Aurum PropTech. Very good. So this is the right answer. So basically these are the details about the small and medium real estate investment trust. So small and medium real estate investment trust, they can have the asset value between 50 to 500 crore. What is the minimum investment for the investors? What is the minimum investor for the investors that the investors have to do in the small and medium real estate investment trust? Minimum investment that the investors have to do in the small and medium real estate investment trust is 10 lakh per investor. 10 lakh per investor. The investment manager requirement is that the investment manager applying for small and medium real estate investment trust registration must have a net worth of 20 crores and at least 2 years of experience in real estate or real estate fund management. Okay. The both commercial and residential properties, for that the small and medium REITs with the fundraising start from 50 crore for minimum of 200 investors. So there should be minimum of 200 investors that should be present. Okay. Now coming to the next question, try to answer this question, and there is only one more question to go, then you are free to leave the session. Okay. So try to answer this question. So Reserve Bank of India has, so this is the article from June 2025, but remember that there were many of the articles or many of the amendments that have happened in the lending against gold and silver collateral. That's why it is important, because the amendment happened in August also, the amendment happened in September also, okay, or it was in news in October also. So that's why these directions are important. So tenure of consumption loans in nature of bullet repayment loan shall be capped at 12 months. Yes, the consumption loan, that is bullet repayment loan, that only once the payment will happen at the end of the tenure, at the end of the timeline, the repayment of principal and the payment of interest will happen in one go. So this shall be capped at 12 months. Loans against ornaments shall be subject. So loan can be given against the gold or silver ornaments or gold or silver coins. So gold loan against ornaments shall be subject to the aggregate weight of ornaments pledged for loans shall not exceed 1 kilogram for gold ornaments, 10 kilogram for silver ornaments. Correct. Detailed credit assessments need to happen if the gold or silver collateral is above 2.5 lakh to a borrower. Correct. A lender shall release or return the pledged collateral held as security if the repayment has happened. So if the borrower has repaid the loan, the collateral has to be released within a maximum period of within the maximum period of 7 working days. 7 working days. Okay. In case of delay in release of pledged collateral, so on per day basis, if the delay is happening, 5,000 rupees per day will be the compensation that has to be given. Got it? जो 1 day पढ़ा था मुकुंद, I think that you have read it in digital digital guidelines, digital lending guidelines, उसमें 1 day था. Okay. So here, in case of delay in release of the collateral after repayment, you have repaid the loan and the collateral is not being released within 7 working days. So after that, each working day, 5,000 rupees is the compensation that you will get. Okay. Chalo. So these are the important guidelines. Read through it once. As I have told you that loan can be given against ornaments or coins. Okay. And there is the limit on how much collateral can be taken in the form of ornaments or coins. Okay. Next is that total consumption loan amount per borrower maximum LTV ratio. If the consumption loan is taken by giving the gold or silver as collateral, then maximum loan to value ratio has been determined by the RBI. The banks can set a lower limit, but the maximum limit is this. Maximum loan to value limit is this. Okay. Next is that if the auction is happening, let's say the borrower did not repay the loan within the given timeline, then the auction can happen of the gold or silver collateral, and the auction value should not be less than 90% of the current value. If 2 times the auction was unsuccessful, then the 85% is the value that can be kept, not less than 85% of the gold or silver collateral value. Okay. Now coming to the last question for today, try to answer this. We have covered 3 months, August, September, July, August, September plus 10 days of October for RBI notifications. For RBI notifications, RBI press releases, we have covered August, September plus October for your finance current affairs. Tomorrow, as you have another Maha-Marathon section, that is a combined Maha-Marathon session. In that, we will discuss the July finance current affairs. So today we have done the major part. Okay, chalo. The key provisions of Banking Laws Amendment Act. So there are some key provisions of Banking Law Amendment Act that have come into effect from 1st August 2025. So Banking Regulation Act prohibits the director of a bank, except its chairperson or the whole-time director, to hold office for more than 8 years consecutively, and 10 years in case of cooperative bank. This is correct. 10 years is the timeline. The consecutive office could be held by a director of a cooperative bank for 10 years. This is correct. Redefine the threshold of substantial interest from 5 lakh to 2 crore. Okay, a entity or a person has a substantial interest in the bank if they are holding 2 crore worth of shares in the bank. Okay, now, so the limit has been increased from 5 lakh to 2 crore, not 5 crore. The bill expands the type of funds that can be transferred to the Investor Education and Awareness Fund. So this now includes shares for which dividends have not been paid or claimed for 7 years, or the unpaid unclaimed interest that is not paid or claimed for 7 years, or redemption amount of mature bonds that have been not claimed for 7 years. So here the first was correct, the second was incorrect, the third was incorrect. That's why the right answer here is, which of the following are correct? One only, D. So these are the details that you have to keep in mind. Okay, so basically these are the updates that has happened. So substantial interest, the limit has been raised from 5 lakh to 2 crore. Okay, so before it was 5 lakh rupees or 10% of paid up capital. Now it is 2 crore or 10% of the paid up capital. These people have the substantial interest. Okay, tenure of the directors of cooperative banks has been raised from 8 years to 10 years. That means the directors of the cooperative banks can have the consecutive tenure of 10 years except for the chairman or the whole-time director. Okay, as well as the bill grants the banks the authority to decide the remuneration for their own auditors. Before, the Reserve Bank of India or the central government was deciding the remuneration for the auditors, or the Reserve Bank of India in consultation with central government was deciding the remuneration for the auditors. Now the banks themselves can decide the remuneration for the auditors. So these are the details. This is it. So I hope you like the session. I try to finish the session fast. I will request you that do see the monthly revision session because they were more in detail. I've tried to bring the questions from the important notifications. I hope you enjoyed the session. Okay, any confusion? Chalo, you're most welcome. No confusion, no query. Shall we close the session? So tomorrow is another Maha-Marathon session. That is the final Maha-Marathon session for you all. That will start from 10 a.m. onwards. Okay, so do join that session because that is going to be a combined Maha-Marathon session that will have 400 plus MCQs. So that is going to be important for all of you. So that session will be taken by Devanshu sir, Gurkita sir and me. So be present in the session. Okay. Okay, so if you like the session, thank you very much. I will be closing the session now. Thank you everyone. This PDF will be provided to you by tomorrow by the team. Okay, and thank you everyone. Thank you for joining. Do tell in the comment section if you like the session. Okay, thank you everyone. So I hope you like the session, and do tell in the comment section if you like the session, and all the very